Taking time out of your Saturday to attend this. It's really important. There's a lot of opportunity in the real estate market right now. Real estate is the way to build wealth. It is the best way that I've found. I've invested in all different types of assets. I've invested in stocks. I've invested in Bitcoin. I've invested in a lot of random things. But real estate is the one thing that is secure. I can touch it. It's the one thing that pays me every single month. There's a lot of benefits to invest in real estate, and it's the one thing that I've never lost a single penny on. Real estate, as you all have heard from many different sources, is the best way for people to build wealth. Most millionaires make their wealth through real estate. It's achievable for everybody, and we're going to cover exactly today how you can dive into commercial real estate investing. And by commercial real estate assets, the big deals that some of you might think aren't possible. I'm going to show you why you don't have to do the residential stuff, why you don't have to start small. And if you're currently in the residential stuff, buying single family homes or 2 to 4 units, how you can make that jump straight into commercial real estate deals. If you haven't already, make sure you download this workbook. I created this for you guys so that you could take notes. This doesn't cost you anything. Everybody has received this in your email. It'll take you to a Google Drive link for you to download, print it out. It's really important for you to take notes today because we're going to be covering stuff that's going to easily show you how you can buy these commercial real estate deals that are going to build wealth for you and your family for forever. So thank you again for joining today. Grab a pen and paper. See right here, I always have notes. I'm always taking notes on things. I want to make sure that I don't miss anything important. And today, we're going to be covering stuff that's easily going to give you over $1 million worth of value. So get a pen and paper, download your workbook, and we're going to get started here in just a second. But I'm curious, where's everybody tuning in from? Put in the chat where you're watching from. Real estate is good in a lot of different markets, a lot of different cities, a lot of different areas. We're headquartered here out of Austin, Texas. Don't scroll up. We have Cincinnati, we got Orlando, San Antonio, Southern California, Connecticut, Austin, baby, Idaho, Leander, Chicago, New Jersey, our boy Rick, Mr. Rick Stein. Hopefully we're buying some New Jersey real estate with him coming soon. Los Angeles, Ohio, Baltimore, Maryland. See, this is the beautiful thing about real estate. Florida, we got people from all over the United States right now. We're all sitting together on a Saturday morning, and we are getting after it. And there is good real estate to buy in all of these different markets that y'all are sitting in right now. We want to own real estate in most of these markets that you guys are sitting in right now. We want to partner with you guys, and today we're going to show you how we can make that possible. So I can see some of you guys on the video. Go ahead, close that door behind you. Tell your spouse, tell your kids that you're going to be busy for the next few hours and you're going to be focusing on your family's future. It's really important to get rid of the distractions because we're going to be covering a lot of stuff today. All right, so for those of you who don't know, my name is Alex Kaufman. I'm sure some of you guys saw me on an advertisement on Facebook or Instagram. I am 29 years old. I was born here in Round Rock, Texas, which is just north of Austin. Me and my partner, Matt, we have a few businesses, and we've had a few businesses in the real estate industry for 5-6 years now. My partner, Matt, he's been in the game for 13 plus years, got his master's degree in commercial real estate. And we've learned a lot over these years, you know. We have a real estate brokerage. We had a property management company. We have funds where we raise capital from investors. We're investors ourselves. We have bought and sold over $60, $70 million worth of deals, whether we wholesaled them, we flipped them, we still own them today. We sold some of them. We've done a lot of different stuff in the residential market, single family homes, duplexes, triplexes, quadplexes, small commercial multifamily, mobile home parks, RV resorts, retail strip centers, industrial properties that we've wholesaled, land that we've wholesaled. We've done some development. So we've had a lot of experience in all these different areas of real estate. But today I'm going to tell you about my favorite area of real estate, which is buying and holding commercial real estate assets. And by the way, for some of you, I'm sure we have a wide spectrum of people here today. I saw that some doctors signed up. I know that we probably have some younger guys, and gals in here who maybe don't own any real estate yet. Maybe they just graduated high school. This is the beautiful thing about real estate is that it is for everybody. I didn't come from money. I didn't come from a trust fund. I wasn't given all this stuff. Matter of fact, 9 years ago, I was a heroin addict. I had turned my life around then. And since then, have amassed with my partner, Matt, and other partners such as Seal over here to my left, a $45 million plus real estate portfolio. And we're just getting started. But it's really important for everybody to understand that this is possible for you. You don't have to come from money. You don't have to be wealthy already. You really just have to have a desire. You need the knowledge. You need to know what you're doing. And you need to go out there and find deals and be able to put those deals together with other people. But it's important to understand that, having a job is not going to build wealth for you. Having a job is not going to secure your financial future. And that's why everybody's here today, right? Like even a doctor who might be in here today who maybe makes, I don't know, $300,000, $400,000, $500,000 a year. That doctor with their salary is not going to be wealthy. That's earned income. What I'm going to teach you guys how to do today is to take your earned income and also find other people who have money, bring this group of people together, find a good commercial real estate asset that's going to have cash flow, it's going to appreciate, it's going to allow you to add value to it so that you can increase its value. Take this thing down so that everybody gets paid and it will pay you passively for forever. And that is the beautiful thing about investing. Nobody gets wealthy through their job. Everybody gets wealthy by investing. And investing in real estate is, like I said earlier, the best investment that I have ever made. But today I'm going to show you how to go straight to the commercial real estate deals. When I first got started, I think I had a goal of like, I'm going to buy one single family house a year for the next, 30 years. I'll have a portfolio of 30 houses and this will be great. That's how small I was thinking at the time because I didn't really fully understand the possibilities. But you don't have to do what I did. You can go straight into buying a big deal for your first deal. And a good example is a guy. His nickname is Seal. He's sitting right here to my left. Let's put Seal on the screen. Can we hear Seal? Does he have his mic?
Yeah, good. Can you guys hear me? Awesome.
So Seal right here, he started working with Matt and I about 12 months ago. He's Matt's best friend. They've known each other since they're in diapers. But Seal, his first deal is a $7.1 million RV resort, 109 slots. He has GP on the deal, and he did that as his first deal. Is that right?
Yeah, first deal. Excited to be here and help out today. But I think the biggest thing was listening to you guys and learning from your mistakes in the past of thinking small. And I think it's kind of been my lifestyle of go big or go home. So I wanted to look for the biggest and best asset for my first one.
Go big or go home. Give him a little break. He's a little nervous. He's a little nervous on the camera talking to you guys today. But, Seal over here, he got out of the Navy. He was a Navy SEAL. And he bought his first deal, which is a 109 slot RV resort. So it is possible for you. But what Seal did is he put himself around the right people, right? This is a team sport. You're not going to do this alone. Even if you're going to put these deals together by yourself and you have the capital and you have the balance sheet to be able to go out and get the loans, you're still going to need partners. Contractors are going to be your partners. The insurance agent is going to be your partner. The bank is going to be your partner. Property manager is going to be your partner. It is a team sport. So what Seal did is he put himself around the right people who were doing the right things, and we went and accomplished a lot together. So we're going to be talking about how you can do that too. But again, like I said, it's really important. If you haven't, get the workbook downloaded. We're going to be taking notes through it today. And what I want to do first is go ahead and put me on the side-by-side. Here in a second, we're going to turn to page 2 in your real estate, your workbook, and I'm going to have you all start with this assessment. Again, this is going to be an interactive workshop today, so I want you guys to participate. If you want to get the most out of it, you're really going to want to take notes. We're going to have exercises. We're going to be going through how to analyze these deals. I'm going to bring some of y'all up if you're interested and have y'all analyze deals with me, just to ensure that you have all the knowledge that you need. So for the next couple of minutes or so, go ahead, turn to page 2 in your workbook, and we're going to do this assessment, and then we're going to come back right after this. The investor assessment. I know how to find deals that cash flow 1 through 10. Everybody put your answer here in the chat. What was your answer? I know how to find deals that cash flow. 1 being I don't know how to find deals. 10 being I do know how to find deals that cash flow. 1, 4. Well, good news. Today is we're going to be going over how to find deals that do cash flow. We're going to run through the equations. We're going to work them live together here in this workshop. I know how to analyze a deal 1 through 10. I know how to find or how to secure financing for a deal. I have the capital or can get the capital for a deal. Very important. I know how to get a deal under contract. I know how to increase the value of a deal. I have a great property manager. I have a network of investors to partner with. I know the market I'm going to buy in, and I know how to get a deal closed. Instead of putting all those answers in there, excuse me, I think I was a little sick this week, but you know what? I'm pushing through it today with you guys. So put your total answer in the chat. We're not going to do for each one, but I am curious to know what your total answer is. I want to see where we're at, where everybody stands with where they're at today. So we have 22, 38, 32. What was your total answer? 15. And be honest, it's okay. That's why we're here. We're here to learn. 30s, 15, 30, 15. This is good. This is good. This means you're in the right place, and we're going to teach you everything that you need today. My hope is that at least by the end of this today, let's say you're at a 15. My hope is that you're at least at a 65 after that. If you're at a 50 today, my hope is that you're at least at a 75, 80. If you're at a 17, I hope to get you up to a 50 today. Commercial real estate and investing in real estate is really simple. It's not a complicated thing. But I mean, it's, this is stuff that we've been doing for years and years and years, 24 hours a day, every single day, on Christmas, on Thanksgiving, on Saturdays, on Sundays at 2 a.m. in the morning. And so it's really hard to teach all you guys, 13 years of knowledge and experience in 3 to 4 hours. But we are going to teach you a lot today and get you a lot further than you are currently right now. And for those of you who are serious about this and are really trying to take commercial real estate and invest into the next level, we're making you guys a special offer today. This is the Get Started Fast workshop offer. This is over $13,000 worth of products that we've created, and we're selling them today, and for today only, for only $247. For those of you who want to take advantage of this and really take real estate investing to the next level, this is for you. If you're unsure about investing in commercial real estate and you're not sure if you really want to do this, then maybe don't take advantage of it. But for those of you who know this is what you want to do, know that this is your family's future, and know that you have to get started and have to start taking action, then this is why we built this for you. Like I said, it's hard for us to teach you everything in 3 to 4 hours, but what you're going to get in this offer is 6 courses on commercial real estate investing. Investing basics, where to find deals, what I look for in deals, analyzing deals, financing, and where to find investors. 6 different courses all involved in the commercial real estate investing essentials course bundle. The next thing that you're going to get is down there in the bottom right. You're going to get the Commercial Real Estate Investors Manual. This is it right here. This thing is insane. This is over 140 pages of documents, purchase and sale agreements, due diligence checklists, LOI templates, company agreements for your LLC, JV and partnership agreements, raising capital documents. Look at how thick this thing is. Over 140 pages of contracts, agreements, templates for you to use in any real estate transaction that you would need. If you were to pay an attorney to draft all these docs for you, it easily costs over $50,000. But you're going to get this today included in the offer. The next thing that you're going to get is the Commercial Real Estate Investing Dictionary. This is every term that you're going to need to know with commercial real estate investing. It's going to give you the equations, the term, the definition. You need to know this language. If you're going to go out there and talk to brokers, if you're going to talk to investors, if you're going to talk to anybody and expect them to take you seriously, you need to know the vocabulary and you need to know the language. And the last thing that we're throwing in, this is going to be really valuable to those who really need the hand-holding, is we're throwing in a ticket to our Find $1 Million Deal boot camp that we're putting on at the end of this month. From April 30th through May 2nd, it's virtual, so you can tune in from wherever you are. This is going to be an interactive boot camp for 3 days. For the VIP ticket holders, it's going to be an extra day just for them. But we're throwing in the general admission ticket. And in this Find $1 Million Deal boot camp, we're not going to teach you how to find a deal that costs $1 million. We're going to teach you how to find a deal that's going to make you $1 million. We're going to show you where to find these deals, how to analyze these deals, how to write the terms for these deals, how to negotiate these deals, and send a letter of intent to the broker or the seller so that you can have a contract for a deal that's going to make you $1 million. So we're including all this today for those who are serious and want to take advantage of the offer. All you do is go to treuniversity.com/fast. to take advantage of the Get Started Fast workshop offer. Scan this QR code. Lifetime access. Someone says, how long do you get to keep access to these products? Lifetime. It's not for a limited amount of time. The only thing that is scheduled is the Find $1 Million Deal Bootcamp. This is a live bootcamp that I'm going to be doing with you for 3 full days. But the courses, the manual, the documents, all these things you get to keep for a lifetime. All right, treuniversity.com/fast. By the way, we don't put these things on to sell courses. What we're really looking for here is to partner with you. The reason I asked you guys, where are you located at, is we want to buy deals in those markets. We need more partners. But in order for us to partner with you and do deals together, you need to know what you're looking for. You need the right education. You need to know how to identify a deal. You need to know what a good deal is so that we can actually get a lot more done together. But that's ultimately our goal, is to find true partners that we can go out and buy more real estate with. All right, so the opportunity, that is the title of this workshop today. There is a ton of things going on in the market right now that make it prime for you to go in and start stealing some commercial real estate assets. There's different things that are happening in the market, and right now more than ever is the greatest time to start looking at these deals. Like I said, Seal over here, he started looking at these about 12 months ago, and the deals are starting to pile and pile and pile and start to snowball more and more and more as time goes on. Interest rates are higher, cap rates are up, maturity dates are coming due, and a lot of people paid too much money for these assets in 2020, 2021. When the virus was going around and everything was shut down, interest rates were so low. And what it did is it allowed these people to go in and pay and overpay for these properties. But now their debt's coming due, and either A, they're going to have to sell it at a loss, sell it at an extreme discount, raise more capital from their investors, or the banks are going to take them back and the banks are going to take a loss. So right now, more than ever, is the greatest time to go in and look at buying some of these commercial real estate assets, because it's not going to be around for forever. The moment that interest rates start lowering, which I don't believe is going to happen this year that much, actually. If anybody pays attention to, CNBC or Bloomberg or, financial news, everybody's talking about how the Fed is going to lower the interest rates. Well, they might, but here's the deal. The stock market's at all-time highs. Unemployment is low. The economy is doing good. Inflation's still going on. So there's no reason for them to lower interest rates yet. Matter of fact, I'm surprised they haven't continued to rise interest rates from where they're currently at. So the longer that interest rates stay at the level that they're at today, the longer this opportunity is going to be here. But the moment that the Fed and interest rates start lowering is the moment that this opportunity is going to start to disappear, because people are going to be able to refinance out and they're not going to be in distressed situations anymore. All right, so let's dive into the presentation. Let's go to the side-by-side. So why you aren't investing. This is probably why you haven't invested yet, and this is why we're going to cover all this stuff today. So first of all, knowledge and uncertainty. It's important to understand and analyze where you're at today, just like we did in that investor assessment, because if we don't know where we're at, we have nowhere to build off of. We have nowhere that we can't solve a problem if we're unwilling to, admit that we are in a problem, right? So knowledge and uncertainty. It's kind of scary going out there and looking at $3 million deals if you don't have the right knowledge and you don't feel certain about whether or not you have a good deal, right? If you have a deal and you're ready to pull the trigger on it, but you're not knowledgeable on this market, you're not knowledgeable on this asset, you don't know if you can raise the rent, you don't know if it's going to cash flow, it's going to cause uncertainty, and you're never going to pull the trigger on a deal because you feel like you might be making a mistake. So that's number one. Number two, you don't know where to find deals, right? We're going to cover some of that today, but if you don't know where to find deals, how are you going to do a deal? Deals don't just show up, in your lap. They don't get presented to you. Commercial real estate investing and real estate in general is a very competitive market and industry. There's a lot of real estate investors out there. There's a lot of people trying to do this, and deals are getting done left and right. But you have to know where to go and find the deals. You have to have the right connections, and you have to have the right people in your corner in order to be able to get the deals. Number 3, you don't know how to analyze deals, right? Just like we talked about in the someone says, do you consider apartments commercial real estate? Yes, commercial real estate for multifamily is considered anything 5+ units. Now, today I'm going to show you why you probably shouldn't go buy the 5 unit, but 5+ units for apartments is anything is considered commercial real estate. And today I'm going to show you how to analyze those deals, right? So you need the knowledge. You need to be certain that you have a deal. You need to know where to find the deals. You need to know how to analyze the deals. And you need to know how to close the deals. If you don't know how to close the deals, you can make it all the way there, but you're going to need the right team and the right resources in order to be able to get this done. All right? So here's why you should invest in real estate. Number 1, appreciation. Appreciation is how you're going to build wealth over time. Real estate is not a get-rich-quick thing here, right? You're not going to buy a deal and get rich overnight. Real estate is a long-term play. All the deals that we've bought and hold on to, we've never sold our rental properties. We've never sold deals that we want to hold on to for forever. The only deals that we've ever sold are flips or deals that ended up not making sense and we wanted to cut dead weight. But you get appreciation by holding on to real estate over a long period of time. Everybody knows that if you buy something today, if you buy a house today, 50 years from now, it's going to be worth more than you paid for it today, simply via inflation. But if you pick the right markets and if you pick the right assets, you're going to get appreciation. But with commercial real estate, you can force the appreciation by increasing the income. Single-family homes, duplexes, triplexes, quadplexes, these are not valued based on the income. Residential properties, 1 to 4 units, they are valued based on what the residential property next door sold for. So it's valued based on the comps. If you have a house in this neighborhood that's a 3-2, 1,800 square feet, in this condition, it's going to be valued based on what a similar house in that neighborhood sold for. That's not how commercial real estate is valued. Commercial real estate is valued based on the net operating income that property produces. So this is why commercial real estate is a lot more controllable than residential properties, is you can control the income via your property management, your business plan, raising the income on the rents and other income, and then also doing everything you can to minimize the operating expenses will increase your net operating income. And that is how you force appreciation with commercial real estate deals. Next thing, passive income. Nobody wants to work for forever. Raise your hand if you don't want to work for forever, if you want passive income. We got 1, 2, 3. Everybody wants passive income. Nobody wants to work at their job for forever. We want to invest our money into assets that are going to appreciate over time and pay us passively. And this is how you can do it with commercial real estate assets. If you're buying residential deals, we own a ton of them. And like I said, today I'm going to show you how to avoid doing what we did and avoid the mistakes that we've made. But we own a ton of residential properties, and they are not passive. There's always problems with these properties. And if you have debt on the residential properties, I can almost guarantee you're not going to cash flow. And even if you do cash flow, $25 a month or something, what is that? $25 a month is $400 a year. Yeah, I mean, what the hell are you going to do with $400 a year? And the moment that your AC unit goes out, the moment that your water heater goes out, the moment that you're vacant for 60 more days than you thought you were going to be, the moment that the tenant moves out and you have to pay for the make ready, all of your cash flow on these residential properties is gone. And by the way, when you have a single family house and the tenant moves out, you're 100% vacant. There is no income coming in. And I know that everybody, wants to do house hacking and let me rent out, every single room in my house, or let me do an Airbnb. But again, going back to this, if you're doing that, sure, you could make more sense of a single family home operating it that way, and it'd probably make more money than if it was rented out to one single tenant. But now you're creating another job for yourself. This is not passive. It is going to be a headache for you. It's not passive. It's going to require a lot of your time. And the cash flow, the passive income in residential properties passively flows the opposite direction. It flows from my wallet into these properties. It doesn't flow from the properties into my wallet. So if you have debt on these deals, especially today, it's really hard to make them make sense. And if you want true passive income, you're going to need to buy assets that are able to support all of the expenses that are involved with owning real estate. The management company, the maintenance and repairs, cover the vacancy loss, cover the utilities that you're going to have to pay, cover the make readies that you're going to have to do, cover the capital expenditures that you're going to have to do to the property, such as the roof, the landscaping, all that type of stuff. Pay your salaries, pay your people. And then also some expenses that people don't consider is you're going to have to hire a bookkeeper. You're going to have to hire a CPA to file your taxes for you. These bigger assets have enough income to support all of those expenses, pay your debt, and still pay you passively. The smaller deals just really don't. I mean, find anybody who's not BlackRock or a large institution who's buying these deals cash. Anybody who's bought 100 single-family homes, and ask them if they would do it again. And if they're looking to grow and scale, I can guarantee you they do not plan on buying another 100 single-family homes. They'd much rather go to the commercial real estate assets that are much bigger, better, and much more scalable. Number 3 is leverage. So here's the cool thing about real estate is you can utilize leverage. Let me make sure that you guys can see this. Where does it get cut off? Right here? All right, we can just go to full screen right now, Kat. So with the deal, let's say a deal costs $1 million. Rob, what's my down payment going to be?
Probably 30%.
30%, which is what?
So 300,000.
300,000. All right, so my down payment is going to be $300,000, right? And then my debt, my leverage is going to be how much? My leverage is going to be $700,000. Now, Seal, if the property appreciates, let's say 10%, so 100 grand, right? Appreciation, 10% or 100 grand. Here's the cool thing about leverage in real estate. So when this property appreciates, excuse me. Sorry, guys, you're going to have to put up with me coughing today, but I didn't want to not put this on for y'all. So when the property appreciates 10% or 100 grand, I'm getting that appreciation based on the 300 grand that I put down, not on the property's purchase price, which was $1 million because I didn't buy it cash, right? So I'm getting about 33% on paper return on my money because I only put 300 grand into the property, right? When it appreciates 10%, and I force the appreciation, I raise the income, appreciates $100,000. It's going to be, my return will be based on the cash that I put into the property, not the entire purchase price. Do you understand that? And that's the beautiful part about utilizing leverage. Also, too, when it cash flows, when it cash flows $30K a year, after all my expenses, after all my debt, and I get $30,000 in my pocket, it is going to be a return of 30 grand based on the 300,000 that I put in. It's not based on the $1 million purchase price, right? So that's why leverage is good with real estate, is you don't have to use all of your money. The banks want to lend money on real estate. The IRS has put things in place so that you can get benefits for investing in real estate. The banks want to lend you money on real estate, and you're not going to pay these debt payments. Where am I looking? Right here. You're not going to pay these debt payments. The tenants are, and you're going to get cash flow and appreciation based on the cash that you put in. Also, too, that 300 grand, you don't even have to put that in yourself. You can raise capital from investors and do deals with investors. All right, let's go back to, there you go. Number 4, depreciation. Just like I was telling you guys, the IRS wants you to buy real estate. This is, all these things make up why real estate is such a good asset for you to buy versus like stocks or Bitcoin or something like that. By the way, Lassiter says, thank you for your service. But depreciation is one of the biggest benefits, because this 30K right here that I'm getting in passive income is going to be offset by the depreciation that the IRS allows me to take. And I'm not going to pay taxes on this 30K that I get here, because the IRS allows you to take depreciation on the improvements of the property that you buy. This is a loophole. Everybody talks about, did you say something? Everybody talks about, Donald Trump or all these people not paying taxes, and this is how they do it. They do it with depreciation. They buy real estate assets, they depreciate the asset, and they get the appreciation, the leverage, the passive income, all tax-free because of depreciation. And also, too, if you ever sold this thing, you can 1031 into another deal and avoid paying capital gains tax. And all these reasons are why you should invest in real estate, and specifically commercial real estate assets. Number 5, equity day one. Let's say today was Monday at 10 a.m. If you wanted to go in to the stock market and log into your Fidelity account, and let's say what is Apple selling for today? Do you know? Can you see that? It was like 130. You can't go into your Fidelity account and say that you want to buy Apple stock.
170, 169.
169. You can't go into your Fidelity account and buy an Apple share for $30 when it's listed for 179. You can place that bid, but the order is never going to get filled. But with real estate, if it's worth $1 million, you can go in there and you can offer 700 grand and get that offer accepted, right? So you can walk into equity day one. When you're buying Bitcoin, same thing, right? Like, you can place the bid, but the order is not going to get filled most likely. I'd say for sure it's not going to get filled. So you can steal deals. Real estate, you can go in, you can negotiate whatever you want. It's the free market. Nobody's telling you what you can and can't pay for it. No one's dictating how your offer has to get accepted, right? You can go directly to a broker, directly to a seller, and buy a deal 30% less than what it's worth and walk into equity day one. All right. Tax-free access to capital, just like I was saying with the IRS. After we've improved this property and it's worth $3 million from the $1 million we paid for it, we can go and get a new loan on this property based on the $3 million value, and get cash in our pocket that we don't have to pay taxes on. It's a loan. You don't have to pay taxes on the new debt that you get on the property, and you can take all that capital, go reinvest it, buy another asset, and repeat the same thing. There's a lot of people who this is the BRRRR method in residential properties, but the BRRRR method in residential properties just means you're going to be cold in the wintertime when your tenant moves out or your water heater goes out, right? Because you can't pay the electric bill. But with commercial real estate assets, you can afford to have that vacancy. You can afford to pay for that AC unit that goes out. But this is how you continue to build your wealth over time: is you refinance the properties, you still hold the asset, you take that capital, and you go buy another one. Tax-free, baby. We want to pay the IRS as little as possible. Tenant paid down debt. Just like I was saying earlier, you are not making these debt payments on this RV resort that we bought with Seal over here. We're not making the $28,000 monthly payments to the seller on this, to the seller finance deal, but we're not paying that out of pocket. The tenants are paying for it. They're paying us rent every month, and they're paying us enough rent to pay for all the expenses and then pay the debt. Right? So your tenants are paying down your debt. You are not paying it down. We had a good little talk earlier. Robert and Matthew believe that buying a single family home to live in is an investment, and they're ridiculous. They must have not slept last night. They're a little delusional, but it's not an investment when you are paying all the money and the money's flowing into the property, right? But with commercial real estate investments or real estate investments in general, you're not paying down your debt like Rob does on the house that he lives in, which is not an investment, but his rental properties and his RV resort, the tenants are paying down the debt, and that's a true investment. All right, and last but not least, it is scalable. So these deals, they're scalable. You can repeat the process over and over and over again. It's not a ton of work. You have to have the right knowledge. You have to have the right education. You have to know what you're doing. But it is extremely scalable. The residential portfolio is not. I'm telling you, man, we've done it for years, and it is not scalable. I think that it makes sense for a company like BlackRock, who has 4,000 or 500,000 employees, however many they have. They have an in-house management team. They have in-house analysts. They have in-house property managers. They have in-house lenders. They have in-house everything. They have all these employees and all these teams, and they're buying all these properties cash. Sure, it's scalable for them, but it's not scalable for you. You don't want to go and do that. You want to buy the assets that are scalable and will continue to allow you to grow. All right. So the opportunity, just like we were talking about earlier, right now in the market, there is debt that's maturing. Rob, what were you saying earlier today about the deals that?
Yeah, doing this for a year, I've seen maybe one or two where debt was coming through, but just this week alone, 5 properties where their debt's coming due, and they paid more than what the property's worth now.
Yeah. So maturing debt is coming, and it's starting to snowball. And I was telling Rob this earlier, is that, excuse me, interest rates are not coming down right now. A lot of these people probably thought that debt was going to be cheaper today than it is currently, and it's not. And they were gambling and they were betting, but their maturity date. So someone asked what this means. This means that they bought a property in 2020, let's say, and they had a 4-year term for that loan term. When people are getting loans on commercial real estate deals, they're not locked in for 30 years. They have 2, 3, 4, 5-year window where they have to either sell the property, refinance the property, and pay off the balance of the loan that they got. Well, those dates are coming. They're here, and there's a lot coming up. Rob, see if you can see how many are coming up in 2024, 5, and 26. How many debt terms? It's all right. You can come back. He's just going to look it up. But the these loans are maturing, and it means that these sellers either A, have to sell it, they have to refinance it, or they have to pay it off, or the bank is going to take the property back because their maturity date is here. And the reason why this is hard for them is because they probably overpaid for the properties, number one. Number two, the interest rate that they had locked in 2020 no longer makes sense today when the interest rate is 6, 7, 8%, and their mortgage payment would be double or triple what it was when they secured the property.
Yeah, from the Wall Street Journal, more than 2.2 trillion in debt is maturing before 2028, and much will have to be refinanced at higher rates.
Yeah, $2.2 trillion. So I'd like to see how many. Do you see if you can see the number of loans? But they're going to lose these properties. They're either going to have to raise more capital from their investors. This is what we're running into, and we've seen this over the last year, but we're starting to see more and more and more come up. Is they're going to have to go back to their investors and say, I need another $2 million. I need another $500,000 so that we can buy down this rate for the next 3 years so that we can refinance out of it. And that's not going to be a good deal. These investors are not going to want to give them more money for a deal that's already not performing. Or they're going to have to sell it and lose money or break even on it, or just hand the keys back to the bank, which is what I think a lot of these people are going to do. But the banks don't want these properties. And so this is what's generating this opportunity right now. We just dove into it, the higher cost of debt. So because the interest rates are higher, it means that it's going to be harder for people to make deals make sense. Now, because it's harder for people to make deals make sense, that means that there's less competition in number four. And this is why we're in here today, and this is why you need this information so that you can go out there and find the right deals. But the higher cost of debt means that these properties don't make sense anymore. And when the properties don't make sense anymore, it means that they have to sell them for lower values at higher cap rates. And there's not a lot of people out there who are buying these deals right now. There's a lot less competition. People are sitting on the sidelines. They're waiting. They're trying to see what's going to happen. There was a lot of, I don't know, whatever you want to call them, wannabe investors, in 2020, 2021. It was so easy to make money investing in real estate. Well, all those people are gone. They're getting out of the game. They're no longer here. They're not in this for the long run. And who knows, they're trading Bitcoin right now or something. But there's less competition, and it's your opportunity to come in and steal these deals. Did you find it?
No, they don't. They don't give like a number of loans, but 2024, I found just this year alone is 930 billion coming due.
930
So almost
billion
1 trillion
in 24.
in 24.
That's crazy.
Yeah.
Rob, how many times have I told you to avoid my mistakes?
Every day.
Every day. I'm like, Rob, you're spoiled, dude. You're getting to skip all the heartache and the headache that we went through to figure this out. And I hope that you guys do too. So number one, my biggest mistake, in my opinion, was thinking too small. And I was actually on a, a podcast yesterday talking about this. And, I always thought big, like even before buying my first house in that single family home with my partner, Matt. This is it right here, actually. This is me outside this property. I used to drive by this property every day. I'd sit in the street, I'd look at it, and just admire the single family house rental that I had bought. I had never been inside it, and I finally went inside it earlier last month. But I was thinking too small. Like I was like, yeah, I'm gonna buy one of these a year. By the end of 30 years, I'm gonna be wealthy. I'll have all this passive income and all this appreciation and a 30 house real estate portfolio. I was thinking too small at the time. But even before I bought this deal, I was reading about and studying buying apartment complexes, 32 unit apartment complexes, but I didn't think that it was possible for me, right? I didn't have the capital. I didn't have the balance sheet. I didn't have the things needed in order to facilitate buying that deal. And I'm hoping to tell you guys that it is possible. You don't have to do what I did. You don't have to buy this house, then go buy a duplex, then go buy a triplex, then go buy a quadplex, then buy a 5 unit and work your way up, step by step. You can go buy a 32 unit apartment complex today that's going to make you $1 million. You don't have to start small and think small like I did. But on the podcast yesterday, what I think our biggest mistake is that it's not that we were thinking too small necessarily. It was that we built our organization and our systems and our people around these smaller deals. And that's why we stayed stuck in them for so long, is because we had all these deal finders bringing us residential deals, property management companies we were around were bringing us where our entire infrastructure was there to support these smaller deals. And so the moment that we opened our infrastructure up in our team and our people and everything that we have into facilitating these larger deals is when the larger deals started to happen. So not only were we thinking too small, but our environment did not support these bigger deals. They supported the smaller deals. So don't think too small. It is possible for you. You can jump straight to the big stuff. Uh, deals with no scale. There is absolutely zero scale to that house right there. Now that house, it took care of us. We did good on it. We bought it for 139,000. 6 months later, we refinanced it at 200,000. Put all of our money out. Went and bought another deal with the cash that we got out of that one. Then we refinanced it again a year and a half later. Pulled more money out, and now we're actually in the process of selling it. But this house did good for us. It took care of us, but I have never once received one single dollar of cash flow from this property. And I remember thinking to myself, like, what the hell? We've owned this thing for 6 months. Like, where's all this cash flow? This is my first deal. I bought real estate because I wanted the cash flow. I wanted this passive income. And it was like 6 months into this property, and I was like, cash flow ain't coming. The cash flow will never come from these deals. And I've never once received a single dollar in cash flow from this property, but we did gain the appreciation. But you can also gain that appreciation with the bigger deals we're going to go over today. That city the house is in Austin, Texas. So we bought it for 139. Today it's worth 350. Got a lot of appreciation, but the only way to get that is to refinance or sell it. And each time we refinance, the debt costs more, and we have to put money into it every year for taxes, insurance, management, vacancy, all this stuff, right? The rent does not cover all the expenses and the debt that's involved with it. Deals with bad debt. A lot of these residential deals that we buy them with hard money loans. These commercial deals that we're going to show you to buy, you don't have to buy them with bridge debt. You don't have to buy them with hard money, 10%, 12% interest rates, 12-month terms. You can get the best loans available for real estate out there by buying better deals. But never buy a deal that requires bad debt, because this is where a lot of people go wrong. A lot of people are scared to debt. A lot of people don't want to, they trash on real estate investing because you have debt. But there's a difference between good debt and bad debt. Your credit card that you're using to, buy Gucci bags or Starbucks or whatever, that's bad debt. Real estate debt that is paid down by the tenants and is secured by a great real estate asset, that is good debt. And you always want that debt. All right, deals with bad management. Here's the thing with residential deals too. You're never, ever going to get a good management company to manage this house right there. You can find good people out there, but the manager is going to make like $75-$100 a month. How are you going to get somebody to care about one of your most important assets for $100 a month? These are the people who are overseeing the maintenance. These are the people who are putting in the maintenance requests. They're managing the contractors. They're doing all the preventative maintenance. How are you going to get somebody to care about one of your most important assets for only $100 a month? You can't. I mean, they just don't care. They care about their job. They care about their company. They care about doing the best they can to an extent. But at the end of the day, it's $100 a month, and they don't care about your property. It's very hard to get somebody to put a lot of effort into something for $100. And by the way, managing these properties is a pain in the ass. So to get them to do a pain in the ass job, to put a lot of effort into it and oversee your most important asset for $75 or $100 a month is just not going to happen. It's going to be very hard for you to find a really good manager to manage your rental properties that are residential. But these commercial deals, you're paying people salaries. They support being able to pay and hire good people. They support being able to hire top tier level companies that this is all that they do. And it's enough money to get them to care about it because it's a bigger deal. It has more scale. Last but not least, deals that can't support expenses. Like I told you, we have never gotten a single dollar in cash flow from this deal. Never would. The only way we would is if we owned it free and clear and we didn't have debt on it. And even then, it wouldn't be enough for it to make sense. It would make more sense selling it, getting that equity out, and buying a different asset. But these deals cannot support all of the expenses that are involved with owning real estate. Everything I've been telling you, the vacancy, the property manager, the maintenance requests, the utilities, the landscaping, the new roofs, the AC unit, the water heater, the bookkeeper, the CPA. You're never going to be able to do all that, cover all those expenses, cover your debt payments, and get cash flow with these smaller deals. Kat, can we read through some of these questions for a minute before we move on to the next one? How's the quality here, guys? I see some of y'all saying that you can't read it. Is the quality good? Zoom is trash sometimes. For some reason, quality is good some places, but it's not good on Zoom. All right, scroll me up so I can see some of these. Put some questions in the chat. By the way, we're going to have a Q&A here at the end. But if you want to go ahead and put your questions in the chat for now, we can start answering some of them. What are your thoughts of taking day trading income and investing it into commercial properties? Can I become an angel investor and keep my responsibilities at a minimum? Yeah, absolutely. You can be a passive investor. Dustin and anybody else who's interested, go to trecommunity.com/TR3. Matt or Rob or somebody put that in the chat. But you can invest with us, and there's a lot of opportunities for you to passively invest. What other questions do we have here? Can someone get you I know. I got tea right here. Can someone give me some tea with a lemon and some honey, please? Cat? No? All right. This is what I deal with. See, it's hard to get people to really dive in when management companies are getting paid so little. Alex, thanks for showing us today you're serious about your craft. All right, moving on. So here's what you want to look for. Let's go back to the shared screen. All right, so here's what you want to look for. Number one, a good location. You don't want to buy deals that are in a bad location. Buying deals in a bad location will never result in anything good. We've been lucky enough to be headquartered here in Austin and solely focus a lot of our real estate investment, a lot of our assets here in the Austin, Texas market, which is a great market to invest in, a great city. Thankfully we weren't in like Alice, Texas, or some other city like that where we were thinking small and looking at a bad area. But you want to focus on a good location. Good location will bring you good tenants. It'll bring you good managers. It'll bring you good contractors. It'll bring you good appreciation. It'll bring you good debt. Everything good follows a good location. Everything bad follows a bad location. You're never going to be able to find a good management company in a bad location. Some lenders won't even lend in bad locations. You're not going to get good tenants in bad locations. You're not going to get good rent growth in bad locations. You're not going to get good appreciation in bad locations. Everything follows a good location. And what is the number one rule in real estate? Even if you know nothing about real estate, everybody knows this rule. What is it, Rob?
Say that again.
What's the number one rule in real estate?
Don't buy bad deals.
All right. Yeah, don't buy bad deals, but location.
Yeah.
Location, right? Focus on good locations. You want to buy deals where people are moving to, right? Like DFW, good area. Houston, Texas, good area. South Florida, good area. We've started to expand where we are buying deals. A lot of the places that you guys mentioned you are located at, a lot of those are good locations. You want to stay away from places where you can't evict tenants. There are some good cities that don't facilitate good business. So you want to stay away from those locations, such as Seattle, Washington, New York, all the stuff that's happening with Trump up there. You want to buy deals in places that have jobs moving to, they have good rent growth, they have population growth, good location, and also support good business too. All right, number two, cash flow day one. So you need to buy deals, again, that are going to cash flow, but they need to cash flow day one. Here a little bit later, we're going to show you how to underwrite that and see if the deal does cash flow day one. But number one, you're not going to be able to get debt on a deal that doesn't cash flow day one. So, or a good debt at least, you're going to be forced to structure a seller finance deal. You're going to be forced to get a hard money loan or bridge debt. And seller financing can be good, but you want to stay away from the bad loans. And the good loans are going to follow cash flow. But you need cash flow day one, and it needs to be sufficient enough to where, if all else fails, this current cash flow is enough to be able to get a good return. The next thing you're going to be looking for is the ability to add value. Just like I was showing y'all in here, we're going to go through the added value formula a little bit later today. But you need the ability to force the appreciation and add value to the property. Now, when I'm talking about adding value to the property, I'm not talking about, granite countertops, quartz countertops, new floors, a pool, all that stuff. You can add value to a property with all those things, but you can also simply just go and raise the rents. You can take the existing management company who's not a good manager, move them out, move a new management company in who is going to operate it better, and add value to the property that way. The true way you add value to commercial real estate deals is by raising the NOI. When you raise the NOI, you are going to increase the value of the property. NOI stands for net operating income. Next is good debt terms. So you never want to buy a property that requires you to have bad debt terms. You're setting yourself up for failure. You want to go out and buy deals today that are in a good location, they cash flow day one, you have the ability to add value and increase the value of the property, and they support good debt terms. And if you do this, even at today's interest rate, you're going to be set up so good. Because look, if a deal makes sense and checks all these boxes today, when interest rates do lower, this property is going to be worth way more than you bought it for. If you're going in and buying deals at, a cap rate in a good location, a cap rate that makes sense today, good location today, cash flows today, you have the ability to add value, and you're able to get debt that makes sense today with today's interest rates. In 2-3 years, when interest rates are much lower, and you refinance that thing or sell that thing, I would recommend refinancing it. But when you sell it, you are going to be walking into a tremendous amount of value and equity, because it's going to increase tremendously from its value today. I see the question. I'll get into some of these questions here in a minute. All right, so 2024 acquisitions year to date. So this is 2 deals that we bought in 2024. First of which, who did that? Did y'all see that? The balloons? All right, so here, the first deal. Let's dive into TR3 RV Resort with old Seal over here, because we have Seal. Can you? All right, Seal, tell us about this deal.
Yeah, it's a great deal. Located the best thing, like Alex was mentioning earlier, location, location, location. This one's in Kaufman County, which is the number 1 fastest growing county in Texas, number 2 in the nation currently. So it came to us through a broker up in that area.
Tell me how it meets all these things right here.
All right, so location I just mentioned in Kaufman County. So cash flow day one. Right now, it's currently it's sitting at about 92 to 94% full. So the cash flow, it's going to have cash flow day one, and the ability to add value comes from we're below market rents in the area by about $150 per slot. So we have the ability to raise the rents $150 day one and immediately add that value. And then number 4, good debt terms. So good debt terms is we did seller financing on this one, and that we negotiated to where we have 0% interest. So all of our payments are going to principal. I wouldn't say that's good debt terms. I'd say that's great debt terms.
It's insane debt terms.
You're never going to see. I don't know if we'll ever see that again.
Hit this button right here, bro. It's insane debt terms. I mean, that deal right there is an amazing deal right here. As you can see, it's brand new. This thing was built in 2023. It's really nice. It's got these palm trees everywhere. Uh, and it's got a pool, it's got a hot tub, it's got laundry facility on site, it's got an outdoor patio where they can, grill and sit underneath a nice thing over there. What else does it have?
They're bringing the showers in.
Yeah, we're bringing shower facility in. It's got a pickleball court on it. Yeah. It's got 300 plus yards of I-20 highway frontage road, 20 minutes from Dallas. It's an insane deal, right? And this was not a distressed property. So this is really important for you guys to understand, is that you do not have to buy distressed properties. We're not looking for distressed properties. I don't want to find something where, y'all can hear me good still? I don't want to find something where we have to go in and renovate every single unit. That is a job. That is not passive investing. Even when you have all these people doing it, it's going to be a tremendous headache for you. But this thing cash flows day one. We structured insane seller financing terms, about 20% down, 1.4 million, and he's going to finance the rest to us with 0% interest. Every single payment that we make is going to pay down our principal. Now, this is kind of a unicorn of a deal. These things don't come up very often with all the boxes being checked, and specifically these seller financing terms, but they're out there. If we weren't looking for these deals, we would have never seen this one. And we're buying this one with all of our investors. So there's this one here. Hey, let's run them through I'm going to show you guys how to add value to a property. So like I said, adding value does not mean, let's go ahead and full screen this. Sorry guys, they still have not gotten me my tea with lemon and honey. But this is how you add value to a property. So we're buying this thing for $7.1 million. Rob, what's the current NOI? As of today, they're renting them out for like $500 a month.
It's between 600 to 625, I would say.
625 current NOI.
Or 600, yeah, 500.
So there's 109 slots, 500 a month times 109 times 12. Plus we have some other income in there, charging back the utilities.
650.
Yeah, but that's the gross income.
Oh, current NOI. Sorry.
Yeah. Times 1.04. And then current NOI is like 400 grand, give or take. Probably like 420,000. Current NOI. Now, here's the deal. When we come in here, and they're about $150 below market rents. And these market rents, sorry about my voice today, guys. The market rents, this is comparable to RV parks that are not as nice as this one. Ours is the nicest park in this entire area. There is no park that is as nice as ours, has as many palm trees as ours, has a pool and a hot tub like ours, is all concrete like ours, has landscaping like ours. Ours is the best and nicest park in the area. But all the other parks are rented out for about $650 a month. The nicest park in the area is being rented out for $500 a month. In these RV slots, this isn't overnight stays. These are all people who stay for about 8 to 12 months at a time. They are on month-to-month contracts and service agreements, and they don't have leases like residential tenants do. Just in case they break the park rules or anything like that, we could instantly get them out of there. We don't have to evict them. But they're paying $500 a month currently. And Rob, within the first 90 days, we're going to be raising rents $150, right?
Mm-hmm.
Now, everybody grab your calculators. If you want to be able to do math quickly and analyze deals quickly, if you can't do it in your head, you need a calculator. But this is all you need. It's simple addition, subtraction, division, and multiplication. Our favorite is multiplication because that's what we're looking to do. So I want everybody to take $150, $150. It's so easy, our marketing department did it. She did She did some $1 million math the other day. All right, so 150 times 109. What does that give you? That gives you $16,350 a month. So when we come in and we raise the rents by 150 bucks on every slot, it's going to increase our monthly income by doing that by 16,350 bucks a month. Now take that and multiply by 12 to make it an annual number times 12 gives you $196,000 a year in additional income. Now, let's go ahead and assume that there's going to be some vacancy, which there will be. You know, every single slot is not rented out every single day of the year. People move out, people move in. There's always some vacancy. So we're going to take 196,000, multiply that by 0.9, and that gives us 176,000. Now, this is how much additional net operating income we're going to be increasing and adding to the park simply by going to Kat and saying, Kat, hey, starting next month, your rent is going to be $650. Please sign here. And we're going to do that to every single tenant. That's all the work that's required. You don't have to go in and redo everything. You don't have to go in and spend a whole bunch of money. When you raise the rents, that is how you're adding value to the park. And when we increase the net operating income by $176,000, and this is about a 7 cap market, divide 176,000 by 0.07, we're creating $2.5 million worth of value within the first 90 days. And all we did was increase the rents 150 bucks. And that's how you create scale. And that's how you add value. And that's how you can go in and turn these things, just like Joel said, into home runs. All right, let's go back to the shared screen here, Kat. So we have that one. We bought with all of our investors. And we have this one to the right, TR3 Centre in Pace, Florida. This is a 10,000 square foot retail strip center. It's got 9 tenants in it. This also is on the highway. It's got good frontage road. The beautiful thing about this one and the real opportunity for this is that we had the ability to raise rents on it too. So all of these tenants, and by the way, this was not a distressed property. Neither of these properties were distressed. But what they did have was distressed sellers. So the sellers were in distressed situations and they needed to offload these things. There are good properties in good conditions with good tenants and good locations, good rents, all these things. But the sellers had to sell for whatever reason. So TR3 Centre, Pace, Florida. This is a 10,000 square foot retail strip center. The seller, he actually found us on our website. He called us, said, hey, I've got this strip center. I need to sell it. I'd be willing to take $1.45 million for it. I said, I don't know anything about Pace. You know, this is what I'm saying in my head. I don't know anything about Pace, Florida. Where the hell is Pace, Florida? So I started doing some research. I called local brokers in Pace, Florida. It's north of Pensacola. It is a good location. There is a lot of jobs and opportunity moving in the Pensacola Pace markets. And the center, he had all these tenants on annual leases. The seller was in a position where he needed some equity out of it. I think he had tried to sell it previously or refinance it for whatever reason he wasn't able to. So he ended up getting a hard money loan on the property, and his debt was more than his NOI. So he was losing money because of his 12% interest hard money loan that he had on the property. Oh, I've got tea right here, but I need the lemon and the honey. So, anyways, he was in a distressed situation. He also, hard money loans, like I told you earlier, are shorter term loans. So he had to get out of this deal. So he said, hey, I'll sell this thing to you. He had owned it since 2008. I want $1.45 million for it. And we started going in and analyzing, and we realized that he was about 30% below what market rents are. He also wasn't charging back the triple net expenses for taxes, insurance, maintenance to the tenants. And so we put this thing under contract, control the deal, and then we started doing all of our due diligence and homework. We bought this one, for with our investors as well, and we bought it for 1.45 million. Since we acquired it in the last couple of months, we have raised the rents about 30 to 40% on all the lease renewals for these tenants, and therefore increased the value of this property to close to like $2.2 million within 60 days by simply going and putting long-term leases in with the tenants and increasing their rents. And so this is what y'all are looking for, and this is what we're looking for. You want to find properties that meet all these things right here, are in good locations. Both of these properties cash flow day one. They're both in good locations. Both of these properties had the ability to add value, and both of these properties were able to get good debt terms. So that's what you're looking for, and that's what you guys should go out and start looking for in your local markets or wherever you're looking to invest. All right, so how do you structure deals? Rob, what's the first way you structure a deal? What's number one? Let's see if you know the answer for this slide. What's number one?
I guess how I'm looking at deals is, I'm looking at the location, and then I'm looking at what the debt terms are going to be.
Okay, so you call.
So I see what you're saying. Where you're getting at? Call the broker. Yeah,
call a broker. You're never going to buy real estate deals by just sitting here in this webinar. Okay, you're never going to find real estate deals by just looking online. You're never going to find deals by sitting in a spreadsheet. Real estate is a contact sport. You got to talk to people. How many people you talk to a day about deals?
Sometimes 100 plus a day.
100 plus a day. You got to talk to people. You don't know what the deal is unless you get out there and you talk to somebody. Now, you need the information on how to do these deals, and you need to know how to talk to somebody. And that's the whole purpose of why we put that offer together for you guys, is because it's going to show you exactly how to do this. It's going to show you what to say, what to look for, the vocabulary like you have in the dictionary, and how to structure an actual deal. But you need to have conversations. Don't be scared. If you don't have the confidence and the knowledge, and you don't have it completely after this today, you need to get it, and you need to start taking action, because you will never, ever get deals by sitting in a spreadsheet. Deals are made on the phone. Deals are made by shaking hands. Deals are made by talking to people. And that's where you truly find out what the story is, what the motivation is, and how you're going to be able to structure it. You got to call the broker or the seller. Next, the motivation. What are we looking for with motivation, Rob?
Why are they selling? Right now is not a good time to sell in the market. So, what's their what the reason but why they're selling?
Yeah, what's the reason why they're selling?
Yeah.
Why do they have it on the market? What's going on? What's the story? Both of these deals right here, they both have a story. And we did not put these deals under contract until we knew the story. I had to call them. I had to learn the motivation. I had to learn the story. I had to learn what's going on in order to be able to structure the deal. So you have to learn the motivation, because the motivation is going to be the reason that they're selling, number one, but also their motivation behind selling is going to allow you to structure the deal in a way that solves their motivation. Just because the deal is listed for $2 million, it doesn't mean that the deal is going to get done at $2 million, and it doesn't mean that it's going to get structured in that way. But you'll never know if you don't call the seller or the broker and learn the motivation. Next, you need to underwrite the deal. This is where the spreadsheet comes into play, but also you can underwrite it just like this. I'll show you guys this afternoon how to underwrite a deal in 2 minutes or less. It doesn't take much time to underwrite a deal. You don't have to have some expansive spreadsheet. It's just a few numbers. It's a little bit of addition, subtraction, division, and multiplication. That's it. And you can underwrite a deal just like that. But you underwrite the deal, and then you make the offer based on what you know, what you gathered, who's buying, where's this market at, how many other offers they have, what is their motivation, what is their underwriting, why are they selling, how can we put this together, are they open to seller financing, will this support other debt, what's my cash flow day one, how am I going to be able to add value to this, How much time do I need to be able to execute this? Who's going to manage the deal for me? Boom, I'm going to make an offer and lock it up. All right, let's before we go into this exercise, Kat, let's answer some questions here. We can go to full screen. So tell me here, read me some questions. All right, let's scroll down. Yeah, I understand. What do we got? All right, cap rate. Someone hopefully answered that for you, but a cap rate, it stands for capitalization rate. And all it means, I mean, just you Google it too, if you don't fully understand it after this, but a cap rate is capitalization rate. And all it is a relationship between the NOI and the purchase price, or vice versa. It is the return that you would get on this property if you bought it cash without debt. So if I've got a deal, let's go to this for easy math. If I've got a deal that I'm buying for $1 million and it brings me $100,000 in NOI, then that means that it is a 10% cap rate, because I take my $100,000, divide it by my million, it gives me 10%. And that's all cap rate is. It's a relationship between the NOI and the purchase price. Now, commercial real estate deals, this is typically how they are valued in certain markets. Certain markets trade at different cap rates. Certain classes of real estate trade at different cap rates. Certain asset classes trade at different cap rates. And so cap rates are typically how deals are valued, but it's not the end-all, be-all. And Matt is getting antsy right now when we talk about cap rates. Matt hates cap rates. Hates when people try and value deals solely based on cap rates. But like I've been telling y'all, there's a lot of things that go into deals, in structuring deals. But a cap rate is an important metric for you to understand and know. And it's how your deal is going to be valued. It's how people are going to base the price that they're going to pay for it from you. Banks are going to value your deal based on the cap rates. So it's an important metric. But all it is a relationship between NOI and purchase price. All right, what do we have? Depreciation, the how and when for beneficial reasons. The how and when is always. So please explain depreciation. Depreciation is what the IRS allows you. What time is it? 12:24. Depreciation is what the IRS allows you to write off. So if I have a $1 million property and your value here, can they see this, Kat? I can't see. Your value here, your $1 million value is made up of two things. You have improvements on the property, and you also have the land value. Now, if the land value is 30% of that and your improvements are 70% of that, then that means you have $700,000 worth of improvements that you're able to depreciate. Now, you can utilize straight line depreciation, which means that you would, write off the same amount every single year, year over year, until you have fully depreciated the improvement value of the asset. Or you can accelerate the depreciation. So you can take, 29 and a half years, 37 years of depreciation, straight line depreciation, in 5 years or less, this entire $700,000 value. And this is the benefit, is when you take, let's look at it. What is 700 grand? If you were to accelerate the depreciation, you do this via cost segregation study, and you take all of that over a 5-year period, it would be about $140,000 a year of depreciation that you, your investors, your partners get to take. Now, the how and why of it, on paper with the IRS, you want to take a loss because that means you're not paying taxes. but it doesn't mean you're actually losing this money. It's just with the IRS. The property is actually going to appreciate, but with the IRS, you're going to depreciate the improvement and take that loss to offset the income so that you don't pay taxes on the income. And so if you have $1 million deal and you're getting, let's say, $10,000 a year in cash flow, but you have a $140,000 loss on the improvement, then that means you're taking a $130,000 loss that year on that property on paper. Even though $10,000 got handed to you, you put it in your bank. When you file your taxes and you report it to the IRS, you took a $130,000 loss. This is all legal. This is what they want you to do. This is what they tell you to do. And this is why real estate is such a good asset to own. Now, if you're a real estate professional, you can also take that $130,000 loss and offset some of your active income. If you are a real estate professional, you can offset the passive and the active together. And that's the beautiful part about real estate. So the how and the why is because you don't want to pay taxes. You want to take a loss. You want to keep money. You want money in your pocket, but you don't want to pay taxes on it. All right. What else we got? All right. Just pick one. All right. So true. And asked several times different ways to get motivation. Absolutely. The question is how or where do you find the cap rate? So it can be found via softwares and such. I'm going to show you guys the software later to find a deal. But you just call, you talk to local brokers, you talk to, you look at what they're listed for. Like when we look at deals later and we see that Austin is, selling all their apartments at like a 5 cap or 4.5 cap, then that means that is going to be near the cap rate for that market. In Miami, and it's selling for the same thing, same concept. In Corpus Christi, it's a 7.5 cap. College Station, we're at like 7.2. And you find this information by studying the market, right? There's a lot of data out there. There's a lot of people that you need to go talk to. And again, like I said, it's hard to teach you guys, 13 years of knowledge and experience in a 3 to 4 hour period. And that's the reason why we put that offer for you guys today. For those who are serious and want to learn what cap rates are, for those who are serious and want to go out there and find deals, go to treuniversity.com/fast and take advantage of what we have available today, because it's going to show you all this stuff in detail. And it's going to give you everything that you need to go out there and buy deals. All right, give me another one. Would you do the cost segregation study as soon as you purchase a property? It depends on the strategy and what you're looking to do with it. Like if you plan on selling the property next year, then no, you wouldn't do that. But if you're holding on to it, yes. And if you are going to do a cost seg, first and foremost, talk to your CPAs and your attorneys and your tax professionals, because I am not that for you. But you don't want to have to go back and amend a return. So if you're going to do a cost seg and you're going to accelerate the depreciation, you should start that year one. All right, keep on going. Let's go to the next one. All right, what do we got? Keep scrolling. Is that it? Cost segregation is the process of breaking up the improvement of the asset into different little parts that you can accelerate the depreciation on. So like instead of just saying, this building is worth 700 grand, I'm going to break up the doors, the floors, the ceiling, the light fixtures, every little component of this asset. I'm going to break it down so that we can accelerate the depreciation on it. They have a useful life, and that's what you're finding. And before diving, way too deep in tax matters, just know that it's available. You can depreciate the properties, and that's a huge advantage to you as a real estate investor. All right, Kat, it's hard to do this when you keep on up and down. Let's go ahead and go to my screen here. So let's go ahead and go to the exercise real quick. For the next few minutes, I know this is a lot of information. I know that I'm coming at you guys. Remove that chat box for me, please. I know that I'm coming at you guys with a a ton of info. I'm coming out like a fire hose full of information. I hope y'all are taking notes, but just take a few minutes, look at everything that we've went through so far, and I want y'all to answer these few questions. Do these exercises. There's like 4 questions. It's going to start on page. What page? It's going to be start on page 11 in your workbook. Answer these questions. Take a few minutes to absorb everything. I'm going to see if I can find some honey and some lemon, and we'll be back in just a moment. What do you think was holding you back from investing? We're good now? All right. Welcome back, everybody. So let's see what all these questions were in the workbook. Page 11 and 12. So what's holding you back from investing? What are you willing to commit to in order to get past this hurdle? What is your goal in 2024 with commercial real estate investing? What are the top 3 reasons you should invest in real estate? What are they, Rob? Top 3 reasons.
Passive income, depreciation, and depreciation and appreciation. So those are my 3.
All right. Can y'all hear me? Is there an issue with the audio? All right. So, and what are the steps to structuring deals? Sorry, guys, if there's issues with audio. Team is working on it. And I got some hot tea, and I see y'all's comments, but can you not hear me? Great. Hello. All right, so I got y'all's comments. We got some hot tea. I already had some cough drops. I'm okay. You guys don't worry about me. I'm worried about y'all. The reason we're doing this today is not for me. It's not because of my voice. I'm trying to help you guys out today. Don't y'all worry about me. You worry about you. I'm okay. I feel good. How about you, Rob?
Feeling great.
Feeling great, baby. The goal of this today is not for me to feel good. It is so that we can get you started on your commercial real estate investing journey. So hopefully this was valuable. Like I said earlier, it's hard to solve a problem. Kat, can we close this door, please? It's hard to solve a problem when you don't know what the problem is. So what is holding you back from investing in real estate? Put it in the chat. Rob, what has held you back before?
Initially, it was not understanding how to underwrite deals and stuff. But like I said, not having the team there, but then joining you, Matt, the community, and all the resources and stuff really help boost that up.
Yeah, knowledge and uncertainty, right? Yeah. It's the number one reason why you're not buying deals today. That's what we went over earlier. You're never going to buy a deal if you don't feel confident. You're never going to do what's required if you don't feel confident enough, like you have the right knowledge to get out there and start taking action. All right, what are you willing to commit to in order to get past this hurdle? Look, guys, real estate investing, it's not complicated. It's not a very hard thing. But it is going to require work from you. You're going to have to commit. You're going to have to make sacrifices. We've made tons of sacrifices in order to get where we're at today. And like I said previously, is I don't even feel like we've accomplished anything yet. The job's not done. We're on a mission to build, $100 billion real estate portfolio. We're not even close to accomplishing that. We have a ton of work we got to do. We have a ton more we have to sacrifice to get there. We have a ton more we have to commit to in order to achieve it. And you're going to have to do the same, whether you want to buy one single family house a year, or in 2024, your goal is to, buy 100 units. You're going to have to commit to getting this done. You're going to have to commit to your knowledge. You're going to have to commit to your education. You're going to have to commit to the process. You're going to have to commit to getting good at analyzing deals. You're going to have to commit to having everything that you need in order to accomplish this, because it's not going to be easy necessarily, but it's also not hard. It's not rocket science. Anybody can do this, but you have to commit and you have to make a sacrifice in order to achieve it. All right, let's get into underwriting deals. Okay, we're on page 13, or we're going to be on page 14 in your workbook. Underwriting deals, where to find deals. There's a lot of different ways to find deals. We can't cover them all today, but some of the top ways to find deals, this is where, look at this. The top way to find deals is through brokers. Look at this guy. Look at this broker right here. This is Matthew Tyke, my partner. I asked Kat, I said, why did you put Matt's picture there? And she said, well, he's a broker. Matt is a broker. Brokers have deals, okay? Brokers in your market have deals. They have the listings. They're talking to the sellers. They're the ones who are out there, finding these opportunities. They know who's selling. They know who's putting this stuff together. They want to sell these deals to you. So you need to go out there and start building relationships with these brokers. The brokers know who the players are. And if they don't know who you are, then they're not going to be able to send you deals. But the brokers have deals. Another one, investors and partners. There's investors out in the market, such as us and people wherever you're located at, who are passing. It was a good idea on this hot tea. This hot tea helps out a lot. There's a lot of people in your marketplace who are passing up on deals. They're seeing these opportunities. They already have relationships with the brokers and contractors and managers and lenders. So you need to go out there and you need to build your network. Now, like I said earlier, real estate deals are not done behind a computer screen. They're not done in a spreadsheet. They're done by going out and making contacts and meeting people and building your network. So brokers, investors, partners, where do you find them? Well, one way is if you show up to the Find $1 Million Deal boot camp that we're putting on from April 30th through May 2nd. There's going to be other investors and potential partners for you there, and brokers partnering with us on deals. There's tons of opportunities out there. On a live that we did earlier this week on Monday, if you just searched on Google real estate meetup in my city, whatever your city is, I guarantee you'd find at least 10 opportunities to go out there and network and meet people. Real estate meetups, joining a community, joining a mentorship group, going out and speaking to brokers, going out to real estate events. These are all opportunities for you to meet people, to add to your network who you're going to do deals with. Another place to find deals is software such as, thank you, Kat, software such as CoStar. There's a bunch of these out there. CoStar, Reonomy, Crexy, 10X. A free one is Dotloop. We're going to be, that's what it's called, right? For some reason. LoopNet, yeah, not Dotloop. LoopNet. LoopNet is a free software. We're going to pull some deals up there later and analyze them. But there's all these softwares out there. But like I said, in order to actually get to the deal, you're going to need to go on here, reach out to the broker, reach out to the sellers, and build your network, because that's where the deals are. Last but not least is a place like the Entrepreneur Community Mentorship Group. Entrepreneur Community is a mentorship group that we have where we meet up on a weekly basis on Tuesdays and Thursdays. Matt and I are there to help the mentorship group members analyze deals all day long, every single day. We're available 24/7. But being a part of something like that, where you're building a community, building more contacts, building more people in your network, is how you're going to find the deals. They're not going to be found on, a spreadsheet or by joining, this webinar. You have to leave here and actually go take action to accomplish something. Okay. Let's go ahead and what we are going to do is we're going to run through some multifamily offer formulas. But first, I want to run y'all through one more time what we're offering to you guys today. Kat, can you make this the big screen, please? And then we're going to get into some dive to analyzing some deals. So for everybody who hasn't taken advantage of this yet, and you need to leave here and go take action, you need to get out in the market and go find deals. This is exactly where you can get this stuff. The commercial real estate investing essentials. In order to take advantage of this, just go to treuniversity.com/fast. They put it in the chat. But the TRE commercial real estate investing essentials course package, this is everything that it's going to cover. Commercial real estate investing basics, finding commercial real estate deals, what we look for in real estate deals, analyzing commercial real estate deals, securing financing for your deals, where to find partners and investors, 6 individual courses. We sell this stuff normally for $9.97, but it's included in the package today. The FAST, Get Started Fast offer. treuniversity.com/fast. The next thing you're going to get, I showed y'all this manual earlier. This is 140 pages of documents. Purchase and sell documents, including an LOI template, the purchase and sell contract, amendments, exhibits, all these things that you're going to need to actually write an offer, due diligence checklists. It also has all your lease documents that you're going to need for your tenants. The multifamily lease documents, your lease, your residential lease application, lease addendums, lease amendments. All of this is going to be covered in the multifamily lease documents. Same with commercial lease documents for retail properties, for industrial properties, for office properties. Every single lease, lease application, lease amendment, lease exhibit that you could possibly need. Partnership and JV documents. These are things that we've paid our attorneys to write out and build for us. But you're going to get our partnership agreements and our JV documents. We've easily paid $5,000 to $9,000 in one of these documents alone. But we're giving you the example so that you can template it and create it your own for the deals that you're going to be doing. And the raising capital documents. If you were to go do a syndication today, you'd easily pay $15,000 to $25,000 for documents for your syndication. We've included some of those here in the Commercial Real Estate Investors Manual, investor questionnaires, documents for you to create presentations to present deals to investors who want to invest in your deals, plug and play exact templates for you to use for everything that you need. Honestly, this is one of the biggest values. Like even experienced commercial real estate investors, this manual alone will save you tons of money, time, and headache by being able to plug and play agreements that we've already paid for and use on every deal that we have. The Find $1 Million Deal Bootcamp. Again, like I said, April 30th through May 2nd, we are going to be spending 3 days together. And I'm going to show y'all not how to find a deal that's going to cost you $1 million, but a deal that's going to make you $1 million. Day 1, we're going to go through finding $1 million deals, how to analyze them in your exact market. I'll be there with you, holding your hand, finding a deal that'll make you $1 million. Day 2, we're going to cover underwriting, how to underwrite these deals and ensure that you can add enough value to make $1 million on it. Day 3, we're going to be going through sending $1 million offers. So we're going to send an offer for a deal in your market that is going to make you $1 million to the broker, to the seller. And then day 4 is VIP ticket holders only, but it's an exclusive day with myself and anybody that I have with me. We're going to be going through the investor's manual, ensuring that you know how to fill out all these contracts. We're going to fill out the offers together on day 3. But we're also going to have an exclusive Q&A, and I'm going to help you with anything else that you need on day 4. And last but not least is the Commercial Real Estate Investing Dictionary. This is just an extra bonus. It's going to give you all the underwriting terms and equations, return metrics and equations, complete commercial real estate vocabulary. Let's go back to shared screen cap, please. All this stuff is over $13,000 worth of value, but we package it up together for you guys here today who want to get started fast. It is our Get Started Fast offer. This isn't going to be around for forever. If y'all came back, 2 weeks from now and wanted to get one of these things, you'd have to pay its normal price. But we package it up special for you guys today for those who are serious and really want to take it to the next step. Like I said, you're not going to get a whole lot done by just joining this webinar. Whether it's this or wherever you're looking to go next, you need to get out there, get the right knowledge, the education, the right resources to go out in your market and start doing deals. So all this stuff here. Another thing is when you're a part of our programs and you have this stuff and you know what we're looking for and you know how to actually do deals, then you can actually work deals with me and my team. We have an entire sales team, and all they do all day long is field in JV and partner relationships. People are sending us deals. People want to partner with us. And the only way that we can actually do that is if you actually know what you're doing and you know how to find deals that make sense. And we'll help you get those deals done. Like I said, we want to partner with you. So working deals with me and my team, that's priceless. You can't even put a value on that because that'll make you, $100 million if we do this for many years. Next, the Commercial Real Estate Investing Essentials course, $9,997 normally. The Commercial Real Estate Investors Manual, 140 pages of every document you would ever need to do a deal, $2,500 value. Find $1 Million Deal Bootcamp. We're going to sell those tickets for $500. You're getting it today with this offer. Commercial Real Estate Investing Dictionary, $97. You get it today with this offer. Total of over $13,000 for only $247. Just go to treuniversity.com/fast. All right. So let's dive into analyzing some deals. Rob, what do we have here? The multifamily offer formula. When you were just getting started and you were exiting the COs, how hard was it for you to learn this math?
Not hard at all. It's pretty simple.
Simple, right?
Yeah.
Look, there's the thing right there. It's just a little multiplication, addition, subtraction, division, boom, offer price, right?
Basic math.
How often do we use this formula?
Every day.
How many times a day?
Every deal. So, 100 looking at 100 deals a day. So, 100 times a day, if not more.
Yeah. A few hundred times a day. And how quickly do you do this analysis, this offer?
A minute or two.
Yeah. It's very simple, guys. I know that a lot of people sometimes struggle with math. And look, I'm not a genius. I'm not Albert Einstein. I do like math. Math makes sense to me. It's just numbers. It's an equation. If the equation doesn't add up, the deal doesn't add up. If it does make sense, it's a good deal. But it's very simple, and this is one of the only equations that you need to know in order to analyze deals. So you're going to have your market rent of a property. Rob, let's pull up. Did you send me a?
Yeah, I sent you. Yeah.
Let's see here. All right, what do we got here? What's your favorite one?
We can do the Austin one. Austin's a good market. Highland Flats.
Austin, Highland Flats. This one? Kenan?
Yes.
All right. All right, I told you guys I was going to show you how to analyze the deal. This is LoopNet, not .loop. Forget the name .loop. Those guys freaking call us 24/7 trying to get us to use their software for a real estate brokerage. But this is LoopNet. This is a free commercial real estate listing service. You can find different properties on here. Like, let's see, you got for lease, for sale, auctions. And you can go to any type of property type, such as office, industrial, retail, flex, medical, land. Where's multifamily? Oh, it's for sale. There we go. Yeah, property types, multifamily, healthcare, hospitality. And so, like, if you're looking for apartment complexes, you can select multifamily, and you can choose the market that you want to be. I know, guys, it's Zoom. I don't know why Zoom won't make it clear, but we're going to do our best for you. So I apologize if it's hard to see the shared screen. Is it easier now that it's the full screen? No? All right, whatever. Just put it back on my face. Sorry, trying to make it clear for y'all. But let's analyze this deal. So, Rob, where are we at here? Run us through the numbers.
All right, 24 units.
24 units.
I don't. Does it have the purchase price on the? I think it's.
I don't want to share that. Here, you just tell me. I'm going to show y'all, without even looking at the listing, how to analyze this deal.
24 units.
How big are the units?
They.
Talk to me, Rob. Talk to me. You can't have silence on the live with the people.
They're 24. They're studio units, so they're average around 400 square feet. 300.
300 square feet?
No, yeah, 366 square feet.
I'm gonna guess and say that the rents are around like $1,000, $1,100. What do you think?
They're 1,200.
1,200?
Yep.
All right. So market rent is $1,200. How many units is this deal?
24.
24 units. So I'm gonna take 1,200. And I'm gonna multiply. Y'all grab your calculators if you haven't already. Calculators is how you analyze these deals. So 1,200 times 24, number of units, equals 28,800. Then we're going to multiply it by 12 months because we want an annual number times 12 equals 3, 4, 5, 600. This is our gross potential income. Then we're going to multiply by our occupancy percentage. This means, what percentage of it is going to stay occupied. We're going to have some vacancy. Someone says the goat doesn't like to work under pressure. That ain't true. The goat thrives under pressure. All right, so occupancy is going to take out our vacancy because this is not going to stay 100% occupied. There's always going to be some vacancy in the market. So we're going to use 90% occupancy right now for conservative underwriting. So I'm going to multiply my gross income, my gross potential income, by my occupancy percentage, which is 90%. And that is going to equal $311,000. We're just going to round down. All right. Now, there will be some other income. So we want to add in our other income. So other income is going to be about like 4% of this number. So I'm going to take this number, multiply it by 4%, and that's going to equal about $12,500 a year. Other income is comprised of application fees, late fees, non-refundable pet deposits, pet rent, things of that nature, laundry income. This is all comprised of other income. So I'm going to take this number here and this number here, and this is going to give me my actual income, which is $311,000, and this is my gross income, $323,441. Now, 323. Just keep it at that. So I got 323,000 in income. Now I need to take out my operating expenses. Now I bet these guys are saying that the operating expenses are going to be like 38% or so. But in Austin, property taxes are pretty high. Things aren't very cheap. I'm going to say that I'm going to use about a 42% operating expense ratio for this property. So what I mean by that is that 42% of my income is going to go away to operating expenses. These are things such as management, insurance, taxes, property management, salaries, maintenance and utilities, groundskeeping. All these things are my operating expenses. This does not include my debt, though. So I'm going to take 323,000 multiplied by what I say, 42%.
42.
Times 0.42, and I'm going to subtract my operating expenses of $135,845. And that is going to give me, these are my OPEX, and that is going to give me my NOI of $187,000 is going to be my NOI on this property. Now, this is just a guess. I'm not even looking at the listing. What do they have their NOI? What are they promoting it at?
They are at 240.
240. So,
Yeah.
like I said, they probably chose a
Yeah.
lower operating expense ratio.
They were at 37%,
And they also probably had their occupancy higher than I had mine.
95%.
They had 95%. See, these brokers, these sellers, they don't want to sell you a bad property, right? They're not gonna sell you a bad thing. They're gonna try and blow smoke up your ass, right? They want you to buy this property, so they're gonna sell you the best case scenario. But when you're underwriting deals, you don't want to underwrite it based on the best case scenario. You want to underwrite it based on, worst case scenario. Number one, what it's actually going to do, and best case scenario, so that you know all the potential outcomes of owning this property. But broker maybe didn't include taxes and insurance in their expenses either. But you want to utilize your numbers, not their numbers. So what did they say? 240 was their NOI?
Yeah, their performer NOI, but they were at 240, but they were at 236 off their T12, so around 240.
Same thing. All right, so if Austin sells so they're at 240. I'm going to make that note. So if Austin sells at about, a 4.5 cap, which is probably what they're trying to sell at, right? If Austin sells at like a 4.5 cap, then if the NOI is 187,000 on actuals, then we're going to take that and we're going to divide it by 0.0. What'd they use? 4 or 4.5?
Theirs?
Yeah.
Was at 4.1. So.
Yeah. So we're going to take 187, the NOI, and we're going to divide it by 0.04. And that is $4.6 million. Now, they're trying to sell for what, like 5.5?
Yeah, originally it was. I think they've come down on price since, but yeah.
5.5?
Originally, I think it was at 5.
$5 million. Now, this is what it might be worth. Obviously not if it's not selling. It's probably because they're bullshitting their numbers. But this, when you're dividing by the cap rate, this is not the price that you necessarily want to offer, but this could be the potential value if the market trades at a 4 cap. Now, if you want to offer at a 6 cap, then you would take that 187, you would divide it, 187,000, divide by 0.06, and you would come up with $3.1 million as your offer. That means you're buying this at a 6% cap rate because your debt is going to be, more than that. And you need to buy a property that cash flows. And that's how simply you can come up with an offer. Take your NOI, divide by the cap rate that you want to purchase at, and then boom, you have an offer price. We're going to dive into some examples here in a second, and I'm going to bring some of y'all up here to analyze these. I know that some of this math gets lost with a lot of y'all, gets lost with a lot of people in general, but I want to make sure you understand it today, so I'm going to bring y'all up here and answer your questions. Now, the added value formula, we did this earlier. Did we go through it on here?
Yeah, on the RV park.
Yeah.
Right there, 150.
So this equation that we went through earlier is the added value formula. When we're raising the rents by $150, that's the rent increase, that top line there. Multiply it by the number of units, in this case 109. Multiply it by 12. That means that we're going to have gross of about $196,000. Then we bring in our occupancy, which is about 90%, and that gives us what, Rob?
176.
176. And then I think I lost y'all. I think I lost some of y'all earlier. 176. And then we want to divide this additional NOI by the cap rate, which in this case is a 7 for this RV resort. And how much added value?
2.5.
$2.5 million of additional value within the first 90 days of owning this thing, because we raised the rents on 109 units with 90% occupancy by $150 in a 7 cap market. We created $2.5 million worth of value on that property. Now, this is all in your workbook, by the way, so don't freak out, because you received a copy of this to take notes on. You have all these equations if you're missing a couple of things. But who is brave enough to come up here and run through this make an offer deal with me? Anyone, raise your hand. You can't pick Matt. Matt, you can't. You gotta let one of these guys do it. Raise your hand. Somebody come up here and analyze this deal with me. I'm gonna walk you through it. You don't have to be scared about anything. No one? Yeah, bring Joel up. Got him? One.
What about now?
Yep, we can hear you, Joel. Can you hear me?
All right. Voice.
How are you, sir?
Go.
Good. You ready to analyze this deal together?
Yeah.
Let's do it. All right, do you have your workbook?
I have it, yeah.
All right, we're on page 18.
But I can see your screen.
Perfect. So here's the deal, Joel. You have a 32-unit apartment, and each unit rents out for $1,100. Other income is $15,000 a year, and it stays 90% occupied. It's going to cost you 45% of the annual income and operating expenses to operate the property, and you want to buy it at a 7 cap. What is your offer? So let's run through it. So top line is market rent, right? We have $1,100. Okay, and then what are you going to do next, Joel?
1,100 times 32.
Times 32, that's right. What does that give you?
$35,200.
$35,200, okay. And then we want to take that monthly rental income and multiply it by 12. And why do we want to do that? Annually, that's correct. Yes, sir. And then what's your occupancy percentage?
90%.
So we're going to multiply that annual number by your occupancy percentage, which is 90%. And then we want to add in our other income, right? How much is your other income on this property?
15K.
Okay, good job. Excuse me. And what is your annual income after doing that math?
I got 395, 160.
Look at that. Everybody give Joel a round of applause. He's doing some good math. There you go. Forgot about it. Here. Calculator, that's right. All right, so that is your annual income. Now, we want to subtract our operating expenses, right? So we're going to take what percentage of your annual income out as operating expenses?
So you can subtract 45%.
Okay. Do you know that number?
217,338.
Oh, well, that's your NOI, right? Yeah. There you go. Good job. Joel did freaking ninja math on us. Joel's a purple belt. He just did the old triangle.
How do you know that's my move?
So what Joel did is instead, tell him what you did, Joel, to give him a little trick.
So instead of taking the NOI times the 45% and having to subtract that number from the NOI, just subtract the 45% to get the number. So just skip one step.
Yeah, and so instead of figuring out what 45% is, he said, well, 100% minus 45% is 55%. So my NOI, I'm just going to jump straight to that, and I'm going to multiply my annual income times 55%, which is the subtraction of the operating expenses, and that gives me 217,338. Right?
Right.
All right, Joel. So you want to buy this at a 7 cap. So you're going to take your NOI and divide it by 7%. And what is your offer?
3.1 and some change. 3,104,828.
That's right. Good job. We rounded down, just kept it simple at 3.1 million. But good job, Joel. $3.1 million. Now, Joel, we worked deals together, and you just, I think you took advantage of the offer that we made today. I mean, you've been analyzing a lot of deals, right?
Yeah.
What's been the biggest hurdle for you so far?
Just trying to figure out, okay, so if, trying to stay up with the market as far as lending. In most cases, you're going to have to get a loan, for people that are not raising capital. So just trying to figure out, so for this particular deal, we can pay a 7 cap, but what if my interest rate is 7.8 or 7.5? Am I looking to pay 8.5? Am I looking to pay 8% cap rate? So that's kind of where I'm falling. And then trying to add back any capex or all of the complicated stuff that I've yet to kind of master. Like the napkin math I'm pretty good at. Getting a math number I've been able to get to this number, but doing the next few steps to make sure that this, like if they accept my offer, great. But now what if this doesn't make money now? Because of all of the other things, capex, interest rate came in too high, that kind of thing.
Yeah. Well, don't overcomplicate it, number one. Number two, the back of the napkin math, just like we just did here. I mean, really, you don't need to overcomplicate it more than that, right? Like, and it's hard to answer, every single available scenario because they're endless. But if you got a debt quote on this one at 7.5, you'd either have to put more down as the down payment, which you may not want to do, or you'd have to hire a different price, right? And so that's all it is. There's always a solution to it, and every deal can make sense. Or maybe you have to structure seller financing, just like we are doing with the RV resort. So there's always a way to make it work. You don't have to overcomplicate it. It really is as simple as this to come up with a number. Now, of course, this number needs to make sense with all the other numbers, but you know, the debt market and what type of debt you're going to be able to get. Chris Sweeney, I'll answer your question in a second. The debt market and what type of debt you're going to be able to get is going to depend on what type of asset you're buying. But if you were able to get, agency debt on this at 6%, then it probably would work and put about 35% down. But again, this is really designed just to get you, 90% of the way there, and then all the other work's done in due diligence. And even if you make an offer and you get it accepted, and you find out 30 days later that the deal doesn't work, no harm, no foul. Drop the deal or renegotiate. And that's the whole purpose of going through that process, securing the deal, locking it up, and then the real work begins to make sure that you actually have what you think you have. Because, the sellers, like I said, are going to lie to you. They're going to send you wrong information. You're going to have to figure out the truth and all the details, once you're under contract. But if the deal makes sense, then pursue it further. And if you love it and it meets all the things that we've discussed so far, the location, the cash flow day one, the ability to add value, and the ability to have good management and all those things, then and it makes sense on the back of the napkin math, and it's time to pursue it further. But you got to like the deal, But don't get so caught up in all the little details. And everything that you just bought with the Get Started Fast offer is going to help you out tremendously. And I know that you're already working a lot of deals with us, and we're working these together. But on April 30th through May 2nd, for 3 full days, we're going to run through doing these things together, and we're going to make sure you send out an offer on a good deal that is going to make you over $1 million.
Fantastic. I'll be ready for that.
Let's go. And thank you for joining, and thank you for participating today. All right. Chris Sweeney asks, don't you need to take 90% of the other income? You could have taken the other income first and then multiplied by the 0.9, but because I already multiplied it by 0.9, I'm doing the other income as a percentage of 90%, already taken out the vacancy. So it's a percentage of the percentage versus the percentage of the percentage, which is the same thing regardless of how you do it, if that makes sense. How did you choose coming up with a 7 cap? Sometimes listings come with cap rates. Yeah, if the listing is going to show you what the cap rate is, it means that they're telling you what they want to buy, what they want to sell it for. Sometimes these listings don't have, they don't have a price, and you just got to make an offer, right? So this comes with the knowledge. This comes with you knowing what markets trade for. This comes from you knowing how to do this formula and figure out if the deal makes sense or not. So the cap rate comes from your knowledge of the market, your knowledge of the seller, your knowledge of this property, your knowledge of what you can do with it, your knowledge of the type of debt you're going to be able to get. Like I said, it's really hard to teach all 13 years of knowledge and experience in a few hours. And that's the whole purpose of the Get Started Fast workshop, is so that you can workshop offer so that you can learn all these things. But you have to know your market. You can't expect to know what the market's cap rate is when you put zero effort into learning what the market's cap rate is. You got to go meet people. You got to get out there, look at listings, go meet brokers, go meet other investors, study the market. You should be a student of the game. But you're never going to know that unless you get out there and start studying the market and studying what things are selling for. What does that say? Kat, can you scroll up a little bit? Also to note, just because the seller is asking, just because the seller is asking for a price doesn't mean it's the price that you are going to actually pay. All right, let's bring somebody else up here. I saw, Kat, can you, Yeah, bring Simon up here. Whoever wants to come up here next. Bring Simon up here. Do not let Pat up here. Simon, raise your hand if you want to come back up. I also saw Kat, if you can, I wish I could hover my mouse over that lady's name. She's got San Francisco Bridge in the background. I feel like she raised her hand earlier. Nancy, did you want to come up here and analyze the deal together? Go ahead and unmute yourself.
Yep, can you hear me now?
I can hear you. How are you?
I'm good, thank you.
Thank you for joining today.
Yes, thank you.
What's been the biggest takeaway so far?
I'm just trying to get acclimated and learning how to do this. This is something that I wanted to do, but haven't done because I've been too scared.
Yeah.
So I'm excited to try to figure it out.
That's good. And the good news is that you're not going to have to try and figure this out alone. I think you got the Get Started Fast workshop offer as well, right?
Yes.
Good. Well, you're going to be with us on April 30th through May 2nd, and also all the resources that you got are going to give you everything that you need, and we're always going to be there for you too. So you're not doing this alone. I know that it's scary. I know that it's a ton of information, but I promise you it's possible, and if I can do it, you can do it. You look a lot smarter than I am.
She's the one who actually, she follows y'all and has been following y'all since you started. So she's really my smart part.
Good. Well, that's beautiful. All right. Well, thank you, and thank you for coming up here. Let's analyze this deal. I'm gonna show you how easy it is. Okay. All right. So here's your offer. You have a 48 unit apartment that you're looking at, and each unit rents out for $900. Other income on the property is $18,000, and it stays 90% occupied. It'll cost you 40% of the annual income and operating expenses to operate the property. You want to buy it at an 8 cap. What is your offer? So let's run through it. You have your calculator ready? All right. So the first line is our market rent, and what are we putting there?
The 900.
That's correct. Good job. All right, and we're going to multiply that by the number of units, which is how many?
48.
48, correct. What does that give you?
43,200.
All right, so that's your monthly rental income if it was 100% occupied, all 48 units at 900. Then you're going to multiply it by 12 months because we want to come up with an annual figure. And what is that number?
518, 4,400. So 518,400.
That's correct. Good job. And now we need to subtract our vacancy, which is 10%, and that means that it's going to be 90% occupied. So we're going to multiply this 518,400 by 0.9, which is 90%. What does that give you?
466,560.
Good job. All right. And then we want to add in our additional income, which on this property is 18,000. So we're going to add 18,000 to 466,560, and that gives you annual income of how much?
484,560.
$484,560. Good job. All right. Then we want to subtract our operating expenses. Now, we said that the operating expenses on this property are going to be 40% of the annual income. So we're going to take 484,560, and we're going to multiply that by what?
0.4.
Correct?
40%. Yep.
Correct. Good job.
193,824 is that. So you subtract that from the 466,560, right? 44,560.
Correct. That's correct. And what does that give you?
297.36.
297.36. Good job. And then you're wanting to buy this at an 8% cap rate. So you're going to divide that 297.36 by the 8% cap rate, and that is going to give you a value that you should offer on the property. And what's your offer?
363,420.
Well, close. What'd you do?
I divided it by 0.88.
0.08.
Oh, right, because it's 8%, not 80.
Correct. Yes, ma'am.
Okay.
Do it one more time.
Yeah. 3,634,200.
Correct. We rounded it down just to 3.6 million. But good job. That's exactly how you do it. Hit the hype button for her, Seal. Good job, Nancy. That's how you do it, and that's as complicated as it gets coming up with an offer. Now, on any of these numbers here and figures, is there anything that you're not confident on, or you're not sure kind of, how you got to this point?
No, not in this part. This part I think I could figure out.
Good. Someone asked, Lori Nelson asked, what is the $18,000 in other income? The $18,000 in other income is comprised of fees that are involved by being a tenant there, right? Maybe it is a utility reimbursement. They're going to have application fees for multifamily apartment complex. They might pay pet rent. They might go do their laundry in the laundry facility down in the in that room that they have at the apartment complex. They have late fees, garbage concierge, all things like that are comprised of the other income. Great job, Nancy. And I know that you already muted yourself, but great job. Thank you for showing up today and participating and taking advantage of the Get Started Fast offer, because you're going to have everything that you need there. And we're going to start doing these together. Are you in San Francisco? Give me a thumbs up if you're there, or you just like the bridge. Is that even the San Francisco bridge? All right. Cool. Thank you, Nancy. All right. What I want y'all to do next, we're going to take a couple of minutes. I'm going to go refill some hot tea, but I want y'all to do the value added deal 1 here. We're going to put this up on the screen. Take a couple of minutes to do this deal by yourself, and we're going to come back, compare your answers to our answers, and continue to analyze more deals. So that means we need to run through this. Kat, hover your thing on the laptop over these people so I can pick someone. Lori Nelson, will you come up here and analyze this with me? I'm putting you on the spot. Ask her to unmute herself, Kat.
Can you hear me?
I can hear you. How are you?
I'm good. How are you?
I'm doing great. Thanks for attending today.
Thank you.
What's been your biggest takeaway so far?
Just that I feel I can do this. I've been wanting to do this for the longest time. My biggest takeaway is from you where you said, don't be afraid to go bigger and don't go too small.
Love it. How long have you been wanting to do this for?
20 years.
All right. Well,
I'm 60 and I literally have no retirement to speak of. I have some, but I've wanted to do this for so long. I've taken other real estate investing classes and I've spent more money than I should have, and some of them I got nothing from. And so I just try to get as much as I can from different people, and you're amazing. And I've already learned so much from you.
that's beautiful. Thank you. Well, and I mean, now's the time to take action. 20 years in the making, 20 years in taking classes and education. This is this is what I was trying to tell everyone earlier is that we can sit in these things and learn the information all day long, but you got to start taking action, and you really got to get out there and start putting
That's
in.
the problem, is I'm scared, and like I said, I've lost money, and I don't want to lose any more money, and I've had a lot of stuff going on. I'm in the process of having to try to buy my sister out of the house I'm living in now, because my mom passed away and left it to us, and that's been an issue, and emergency surgery, just a lot of stuff, but I haven't taken classes for the last 20 years.
Right. No, I get it.
Hello?
No, I get it. And trust me, I mean, everybody here on this call today, has things going on in their lives, and there's a million excuses that we could all make on why we can't do it, or why now's not the time, or why we need to wait a little bit longer. But you're doing the right things right now, and so I'm glad you're here. And we're going to show you right now why you already have all the knowledge and information that you need. You just need to get out there and start doing it. So let's dive into this problem real quick. So this is the value-added deal. This is my favorite formula. This is the formula that shows us how much money we're going to make by raising the rents on the property and adding value to the property. So here's the deal you got. You're underwriting a deal you have under contract, and you're calculating how much value you're going to be able to add during the first 12 months by raising the rents. It's a 36-unit apartment complex, and it stays 95% occupied. You plan on raising the rents on each unit by $150 in this 12-month period after you buy it, and this is a 6% cap rate market. How much value are you going to add? So let's run through this together. The first line here, the rent increase. How much? $150, right? Okay, so we put that there, and then we multiply that by the number of units, which is how many? 36 units. Perfect. And then we're going to multiply that by 12 months because we want to come up with an annual number. And then we're going to multiply that by our occupancy rate, which is how much?
95%.
Times 95%. And what does that give you? What number do you have?
95%, $61,560.
Times 0.95. Good job. $61,560. And this market values the property at a 6% cap rate. So now we're going to divide our additional NOI here by 6%, right? And how much value are you going to add?
Let me just check I didn't check it again. 1,026,000.
That's correct. Can y'all still hear me? All right, that's correct. Great job. It's that simple. Well, I rounded it down to $1 million, but the number you had is the number down to the dollar. So that's how much value you're going to add by finding a 36-unit apartment complex that stays 95% occupied in a 6-cap market and the ability to raise the rents by $150. And so with this knowledge on how you can make $1 million on a deal like this, all you need to do from here is go out and find a deal that's 36 units, for example, that you can raise the rents on it by $150 in a 95% occupied market that would sell for a 6 cap, and find that property. $1 million value add calculation, Joel says. That's right. And good job, Lori. Hit it, Rob.
Is there a way to connect with you at some point after this? Because I do have a place in mind that I want to get more information on.
Yeah, absolutely. Have you taken advantage of the Get Started Fast offer yet?
No, but I'm going to.
Good. Take advantage of that. I want to get you all these resources and all this stuff. And then I'm also going to spend 3 days with you at the Find $1 Million Deal bootcamp. But then we're going to start working these deals together. You know, every.
But I don't want, I'm afraid this will go away.
No. Like, take advantage of it and let's start plugging you in with my team immediately. And let's start looking at all these deals.
Because I need to get more information. I haven't called the broker. I don't know the rents or anything yet, but I want to. So
let's do it. That's what I'm saying. Whoever starts taking advantage of the offer that we made today, like I told you earlier, one of the biggest values is doing these deals with me and our team. So immediately, we're going to start looking at these deals together. Not only are we going to analyze them, during the boot camp that you have a ticket to, but today, tomorrow, the next day, Tuesday, Wednesday, Thursday of next week, start sending deals to our team and let's start working these together. We're going to help you analyze these, negotiate these, call the brokers, call the sellers, and we're going to start partnering on all these deals.
great.
Good job, Lori. And 2024 is your year. Let me hear you say it.
It's gonna be. It has to be.
Say it with some conviction.
24 years in.
Say it with some conviction. 2024 is my year.
2024 is my year, damn it.
There you go. All right, Lori. Thank you for joining and great job on this. And you're doing all the right things. You're in the right place and you're with the right team. We're going to help you go out there and really make it your year. All right. Let's do another one. Kat, show me more people in here. Who all we got? Hayden Knox, how do you feel like coming up on Zoom? Can you invite him to unmute himself? Let's do it, baby. Hayden, where are you located at? Oceanside, California. Thank you for joining today. What's been your biggest takeaway today?
Just learning and refining all these calculations and listening to all the questions and just confirming some of the things that I've been learning.
Yeah, beautiful. We're also looking at a lot of deals together, aren't we, Hayden?
Yes, sir, we are.
We're going to get one done soon, aren't we?
I hope so.
Had you ever seen this, guys? Oh, you've seen the webinars and stuff. You've seen Seal's face before. Usually, here he is. He's just iPhone on the Zoom calls, but we made it
here in person.
Here in person today. All right, Hayden, let's run through this deal. I can't see him. Where'd he go?
Okay.
All right, there he is. All right, Hayden. So here's your deal. You're underwriting a deal that you have under contract and calculating how much value you're going to be able to add during the first 18 months by raising the rents. It's a 64-unit apartment complex that stays 90% occupied. You plan on raising the rents on each unit by $125. in this 18-month period, and this is a 5% cap rate market, how much value are you going to be able to add by doing that? So let's dive in. What's the rental increase that you're increasing all the rents by here?
$125.
125. Okay, and how many units are there?
64 units.
So we're going to take, excuse me, 125 by 64, and what does that give you?
8,000.
125 times 64, an additional $8,000 a month in gross rents that you could get if it was 100% occupied a month. Then we're going to multiply it by 12. That gives us,
96,000.
that's correct, good job. All right, now we're going to take our occupancy. What percentage does this stay occupied?
90%, so I times it by 0.9, came up with 86,000, some change.
Good job. All right, and this is in a 5 cap market, such as Austin or another great market, Nashville, Tennessee, where I was at a couple weeks ago. So now we want to divide the 86 and change by the 5% cap rate, and what does that give you?
So I divided it by 0.05 and came up with 1.7 billion.
Beautiful. Look at that. Can y'all hear the? Can y'all hear this thing or no? It's all right. It's okay. It was a bad idea. All right. Good job, Hayden. You did great. By doing that, by finding a deal with 64 units, $125 of rental increase, that's going to stay about 90% occupied in a 5 cap market. By executing that business plan, you are going to increase the value by $1.7 million. Is there anything you're not sure about with this equation?
No, I'm very confident in this equation.
Good. That's great. And we're looking at a lot of deals together. What are you finding difficult with the deals that we're looking at?
I think the thing that I'm noticing is the sellers at this time aren't coming to grips with what the market is offering, and so I think they need to get more familiar with that before they start letting loose with reality.
Yep. So that's part of it. And they also might not be fully motivated yet, right? Because if they,
So that's one of the first things that I ask the broker is why are they selling? Get down to that question, and that'll let you know the motivation.
yeah, why are they selling? What's the motivation? What's the story here? If they're not motivated, they're not going to, sell it at a price that makes sense today because, they're going to hold on to it and sell it, later when the market's better and get the price that they want. But you're right. But more coming, Hayden. So keep up the hard work. Keep sending the LOIs. Keep underwriting the deals. Keep making the phone calls because more and more are coming. Like Rob said, we saw 5 or so this week where they had paid more than the property's worth. The banks are probably going to take the properties back. And this is going to continue to snowball and increase until interest rates start lowering. And we don't have too much time, probably another 12 to 18 more months or so with higher interest rates while this opportunity will be here. So you're doing all the right things and the deals are going to come. But you got to look at a lot of them to find, amazing one. It took us, just for everybody's knowledge here, it's not like we open up our laptop and, open up our email and we see one deal and we're like, oh, great, this is the perfect deal. We have to look at thousands of deals in order to find the home run. And we pull the trigger on that home run and we say no to the other, 999 and we continue to negotiate them. So you're doing all the right things, Hayden, and the deal's going to come very soon.
I appreciate that. If I could add one thing, underwriting these deals, doing them a lot, calling the brokers, having those conversations, it gets easier over time. So there is that fear factor at the beginning, but the more you do it, the more you get used to it, and you understand the numbers and you build confidence, and at the same time you build the relationship with those brokers. So I appreciate all the feedback that you guys did.
Yeah, absolutely, Hayden. And also, Hayden's also an investor with us on the Tier 3 RV Resort, so we're also partners. We need to buy like 3 or 4 more deals together this year.
I agree.
All right, cool, Hayden. Thank you for coming and participating today. All right, everybody. Kat, let's go back to the Q&A. Rob, let's go back to the dual screen. Rob, what are your thoughts so far, and what would be your advice to everyone here today?
Yeah, I think the biggest thing is to, having that team aspect and the group mentality. I think the biggest thing is having that team aspect and that group mentality. And the more people you have on your team, the number one, the more deals you have coming in. And you have that network of people to help you throughout this process. So, real estate truly is a team sport. And you need that, whether or not, it's the listing brokers that are, I guess the biggest thing to take away is probably not the deal you're looking at right now that's going to get done, but it's having that connection with the broker that's going to send you that next deal that will probably be the one that you guys take down.
Yeah, that's right. It's that next thing.
Right.
A lot of times we get on the calls with these brokers and these sellers, and we know that it's not a deal. The deal that we're talking to them about is not the deal that's gonna work. I mean, I already know the numbers don't work. I already know that they're not that motivated. I already know they're asking too much, but I'm going through the process of, like I said, picking up that phone, making that call, making that connection, because I'm going to learn more about the deal. I'm going to make a connection in that market that I want to buy in. I'm going to have this broker, start sending me more deals for me to look at. I'm going to explain who I am. I'm going to establish my credibility, let them know that I'm a closer. And that is the whole purpose of making these calls, is not to get this deal that I'm calling about under contract. Well, that would be great. What we're really looking for is the next deal that he's going to send us, because that's where the opportunities come. More deals you're looking at, more opportunities you're going to have, and the more things you are going to get. And this is pretty cool. We're about to do a live Q&A. I'm going to bring you guys up here and answer any questions y'all have about anything at all. But it was good hearing everybody's feedback on, what has been the biggest takeaway so far today. We got Lori, who's going to make 2024 her year. Damn it, she's going to make it happen. We have a lot of people here today who are looking to get started in this, or ready to make that jump, ready to take that next step. And y'all are doing all the right things, but I can't drive it in enough that joining these things is great, but you really have to take it that next step. If you don't have all the information and stuff that we've shared today, all these contracts, all these templates, all these LOI templates, everything that you're going to need in order to go out there and start working deals. If you need more education on the courses, if you want to attend the boot camp, you'll have to take it that next step and get around the right people. And like I said, all this stuff today that we made in the workshop Get Started Fast offer is well worth. These contracts alone are easily worth $50,000. The course you're going to have access to for forever, and you'll always be able to go back to it. The boot camp, I'm going to hold your hand for 3 days, and we're going to find you a deal, and I'm going to personally help you submit an offer for a deal that's going to make you $1 million at the Find a Deal boot camp. And the dictionary with all the terms that you're going to need to know. But the biggest value in all those things is not the resources that we packaged up and are offering to you, but it's like what Lori wanted. It's the ability to contact me and my team and my partner and my partners and start working deals with us, because we're going to be able to get on the phone calls with you guys. We're going to call these brokers with you, help you analyze these deals, and partner with you on these deals so that we can all make a lot of money. But you really need to start building that team and that community and that network. And if you don't have the right people, like Seal was saying and like Hayden was saying, you can't go do this alone. You need to build a team. So either start building this team and extracting it, from different sources on your own. Come be a part of our team. Take advantage of everything that we're offering. But we want to do this with you guys, and y'all are going to need a team no matter what. So the sooner you have your team, the sooner you're around the right people, the sooner you're going to start making more progress. Kat, can you show me more people? I think Simon was trying to raise his hand again. Right now, we're going to go ahead and open this up for Q&A for anybody who has any questions on anything that we've covered so far. There's Simon. Go ahead and just raise your hand. We have to invite you to unmute yourself, and we'll bring you up and answer any questions you got. Simon, you've been raising your hand all day. We want to go ahead and bring you up here, and I want to answer any questions you have. There he is. Hey, Simon. Talk to me, Simon. We can't hear you, Simon. Try and work with your microphone, and we'll bring you back up. Does anybody else have any questions? We got Rachel, iPhone 12 mini. I didn't even know they made iPhone 12 minis. We've got Carrie. We got Terry. Go ahead. What, Kat? All right, we're bringing up Mike.
I just wanted to ask what, can you hear me?
Yes, I can now.
Okay. Yeah. What asset class are you seeing is the best right now in the commercial space? And what would you recommend for a beginner like myself who has some knowledge in the residential space, but not very much experience in the commercial space? So what asset class would you recommend? So, yeah, those two questions.
Stay up here for a sec so I can talk to you. Where are you looking to invest at? What market?
I'm in Southern California, but I currently invest in Cleveland, Ohio.
Okay.
So either of those two I'd be comfortable in.
Okay. Well, I like Cleveland for multifamily. Also, retail and industrial there. I mean, it really just kind of depends. There's no right or wrong answer on which asset type to go for. I believe is what you're asking me, right? Like retail, multifamily, industrial. Is that what you mean? Stay unmuted with me for a second, Mike.
Yeah. Oh, yeah.
Yeah. So we like it all. I mean, honestly, I really like that shopping center that we own in Pace, Florida, because of how hands off it is. Right, the tenants are going to pay for the taxes. They're going to pay for their own maintenance. They're going to pay for the insurance. We're not responsible for those expenses. And it's in a really good market that has a lot of demand, and there's not a lot of inventory for these mom and pop retailers that we have that are our tenants to go and find other space. Now, we're not, these are local mom and pop businesses. Like one of them's a pizza restaurant that's been there for 17 years. We have Chick-fil-A corporate as a tenant there. It's not the Chick-fil-A store, unfortunately, but it is Chick-fil-A corporate, which is a good tenant. There's like a massage parlor. There's a few other things, like an antique store, things like that. And these tenants are local businesses. They need some space. They're not about to go out of business by any means. They're not about, Amazon's not putting them out of business. And so good quality local mom and pop tenants for strip centers like that, I think make strip centers great investments, depending on where it's at. And same thing with multifamily. The good thing about multifamily is that no one is going to be without a place to live. Everybody needs a place to live. They're all going to need somewhere to rent. And right now we're really turning into a renter nation. Matt and I had a debate, still have the debate, about what's better, buying or renting, as your residence. But I read this article the other day, and it said that renting is now cheaper than owning in all of America's 50 biggest metro areas. So people are going to keep renting. People need a place to rent. It is crazy expensive to buy properties. And personally, I love renting a property, like renting a property from an apartment complex is great. I get top of the line quality place to live. I don't have to deal with any maintenance myself. I got a pool, I got a gym, I got all these amenities, for a cheap place to rent. And there's a lot of people who are going to need that, and it's never going to go out of business in good markets, with good rents, right? Like if rent is, $5,000, obviously not many people can afford that, but Austin or Cleveland and the rents are 1,500 to 1,800, for a 1 to 2 bedroom, that's never going to go out of business, and there's always going to be a need for it. So I would urge you to look at both. Look at whichever ones you want to look at both. Ultimately, you're going to be looking for deals, and that's what we're looking for. I believe that there is going to be a lot of demand for multifamily tenants. You're also going to always have a buyer for that as well. Same thing with retail and industrial too. But we focus on retail, industrial, and multifamily. We're not looking at motels or hotels to buy. We're not looking at assisted living facilities to buy. We're not looking for any of those things. We want good core properties with good core tenants that are always going to be in need. We're not buying much office space. I would say stay away from that. But Cleveland's a good market, and I would focus on retail, industrial, and multifamily.
Those are mostly then passive, because I've heard that hospitality, to get into that, is pretty much another job as well.
Yeah, absolutely. I mean, do you want another job?
No.
Yeah, me either. I got enough jobs already. I don't want a 10th one. So yeah, the idea of investing in these types of assets is to be passive. Now, there's going to be some work that's involved, right? Like you're going to have to check it with your manager. You're going to have to oversee that. But 98, 99% of the work is going to be done by the property manager, and it will be passive for you.
Awesome. Thank you.
Absolutely. Thank you. All right. What else we got? Hayden has a question. Kat, can you bring Hayden up? There we go.
Yeah, you guys are. And so Mike's from Southern California. I am too. So if we were to bring things to you guys, it would be good to know how far you would expand your parameters.
All over the United States. Can y'all hear me?
Okay.
So we don't own anything in California right now. I probably would be open to owning some retail or industrial in California. San Diego, I'm sure, is more expensive than Austin is, or certain parts of California. Probably harder to get a good return there. But what I really don't like about California is it's not very landlord friendly.
I agree with you, Alex. That's why I'm looking outside of California for that specific reason.
Right. And so that's the main reason why I would not want to invest in California for multifamily. But we're interested in investing all over the United States in good markets that are landlord friendly, that are pro business. Like Hayden, I sent you that list of markets that to look in a couple of weeks ago, right?
Yes, sir.
Those are just specific markets that we're looking at, but also we're open to anything else. We want to partner with you guys everywhere. Yes, sir. Thank you. All right. I think we had another question, Kat. Deanna? Can you find her? Raise your hand if you guys have a question. How many people are still here, Kat?
Hey, Alex.
Hey.
This is Deanna in San Francisco Bay Area. How are you?
I'm good. How are you?
I'm good. So I noticed out here in the San Francisco area, if you go into the city, that a lot of the properties that are residential are also commercial underneath. Do we stay away from that kind of venture?
Mixed use?
Yes.
No. It's great. We own this property I'm sitting in right now is all zoned mixed use. Mixed use is good. Of course you want to make sure that it's in a good market, right? Like, are you talking about like in San Francisco, or where are you talking about?
In San Francisco, yeah, in San Francisco proper.
Yeah, I'm sure that I don't know. I mean, I wish I knew all the stats on California and San Francisco, but I'm pretty sure that like it's so wild in California. Like, can't people just go and steal things from a store, up to like $1,000 worth of value and not get arrested?
Look, I live in Burlingame. I stay away, but I do travel down to the city, and I noticed, just driving for dollars. Okay, that these are some of the things that I've come up with, like doing the research and then going and looking. It's like, oh, that's not really an area you want to be in.
Yeah, no,
So
I get it. I would stay away if it were me personally. I would not be looking for retail and stuff in San Francisco, especially when the local government and everybody around there is not supporting these businesses and they're ultimately supporting these criminals. I would be focusing on markets that are going to support me and my business and my tenants and their businesses. So I would, if it were me, I'd probably be looking at a different market than San Francisco. But mixed use is good. Like if you have a mixed use building here in Austin and you have residential tenants up top and retail at the bottom, you're not going to have any trouble renting those out to the businesses and to the tenants who are living there.
okay, thank you.
You're welcome. Hey, real quick, while I got you here, what was your biggest takeaway from today?
Create a team.
Come on, let's go.
Yeah.
You gonna be on my you gonna be on my team?
Yes, I'm gonna be on your team.
All right, let's do it.
All right.
All right. All right, Martin, we're bringing you up, sir.
Hey, how's it going? I won't turn on my camera since I'm driving, but just wanted to ask. I know you were talking about partnering.
Yeah, it depends just because every deal is different and we can structure it in a lot of different ways depending on what the deal looks like. But ultimately it really kind of depends on, what you're looking to get out of it, what you would prefer to do it. Like some people just want to bring deals and we pay them a fee for it. That's fine. Some people want to partner with us on it and own it with us together. That's good too. Some people say, hey, like I got this deal under contract. I got the capital. I need you to come in and operate it. We're open to that. Some people say, I got this deal. I need you to put up the earnest money, raise the capital, and operate it, and just give me a small little piece. We can structure it in a lot of different ways, but it really comes down to what is the deal? What are you looking to get out of it? What are you bringing to the table, and what do you need us to bring to the table? If that makes sense.
Yeah, that definitely makes sense. And kind of what I was thinking was, I'm out here looking at deals. I'm talking to brokers. I get a deal under contract or near contract, and they want someone. They want to look at the team. And if I don't have a team that has a track record that they're looking for, maybe leverage you guys and your track record and something like that.
Yeah, absolutely. And I mean, that's the whole purpose of this Get Started Fast workshop offer that we have, and working these deals with our team and with us and me and Seal and Matt. I mean, the moment when you're partnered up with us, all of ours is yours. Like you get to now talk to these brokers and say, look, we own a $50 million real estate portfolio. We have 240 units. We're invested in this, this, and this. These are my partners. This is us. This is who we are. This is our team. Let's roll. I love this deal. Send me the info. And when you're partnered with us, you get to utilize, all the stuff that we've accomplished is yours. You're our partner as well. And so that'll help you out tremendously.
Okay, great. And that's all included in what your offer is today.
Yeah, you get all this stuff, but all this stuff here is going to really help you out. But the biggest value is partnering with us. But we need to we want to partner with people who are investing in us and investing in themselves. We used to do all this stuff for a long time for free for people, and they never valued it. And so we have to start spending our time with people who are willing to invest in themselves and also invest in us, right? And I mean, this is basically free. $247. You spend that on a few dinners next week. But spend it on this, invest in yourself, invest in us, and let's go make $100 million together.
Yeah, I agree, man. Thanks for the help.
Absolutely. Thank you. All right. Bring them on up. Say the name again. I can't hear you or see the name. Henson. Come on up, sir. Go ahead and unmute yourself. Can y'all hear me? I don't know if I'm on mute or not. Henson, sir. Henson, can you hear me?
Yes, can you hear me?
I can hear you. How are you?
Thanks, I'm going well.
Hey, real quick, before you ask your question, where are you located at?
In Richmond, Virginia.
Richmond, Virginia. I love it. This guy to the left of me, the SEAL, he's familiar with Virginia. Isn't that near Richmond?
Virginia Beach.
Virginia Beach. What's been your biggest takeaway so far, Henson?
Just the information and how you can kind of simplify calculating the maximum allowable offer, value add. It just makes it a lot easier to understand.
I love it. Good. Well, thank you for joining, and go ahead and ask me your question. I'm ready.
So I'm a broker.
Yeah, am I unmuted right now, Kat? So it depends. What would you be looking for? Like what types of properties? How many units? Is he muted again? Unmute yourself one more time, Henson.
Yeah, so I want to go with the bigger stuff, 50, 100 plus deals, which I haven't done any of those, but I know the numbers are bigger, so the bigger deals.
Yeah. So the bigger deals, the bigger you get, the more you're going to have more relationships with more brokers, because the brokers are going to have those, and it's going to be harder and harder for you to reach out to these sellers individually. If you're looking at like 16 units, maybe a 32 unit, I still think the relationships with the brokers are good to have, but then also you could probably do some off-market stuff as well. But the bigger you get into, like what's a 50, what's price per door for like a 50 unit in Richmond?
It can depends on just where it is, because you've got a huge range of different types of classes. And I just got my broker's license, about 2 years ago, so I've been doing a lot of leases. I got a list of Newport News to Virginia Beach, from 5 units on up. So, in CoStar, it gives you the contact information for the owners, also the agents or brokers, if it's listed or if it was listed at some point. So, I don't have to skip trace the owners.
Yeah, no, I get it.
Contact information is there.
No, I know. I mean, we have CoStar too, and we've cold called and worked many deals off market. So I'm just saying, the bigger you get and the more expensive the properties, the more valuable the relationships with the brokers are. But you can absolutely find deals off market. We do it all the time. But it's also good to have those relationships. So do both. I mean, if you identified a list of like 20 potentially distressed owners in like 50 to 100 units within Richmond Beach market, give them a call and see what they have. And then also, good thing for you is that you're also a broker and you're probably looking for that business as well. And even if you don't end up buying it, you can help them maybe find another one and represent them. Maybe you can list this one for them, right? Like you with your broker license have the ability to take these conversations in a lot of different ways that just investors don't have the ability to. You follow me? So I would recommend calling both, meeting the brokers and all the other people that you have working in that market with you, but reach out and meet all the owners because they will also lead to more business even if you don't buy the property.
Thank you.
Absolutely. Thank you. Thank you for joining today. All right. Anybody else have any questions? Rob, what's been your biggest takeaway from today?
Just the sense of community. And, I was thinking about it earlier, right? We got 50 people in here now, and everybody, the value of scale, 50 people, right? 50 people, $25,000 each. That's $1.2 million that you have.
25 each?
Yeah, 25K each. That's $1.2 million. Everybody comes together. You can go purchase so much more with more people.
Yeah.
And so, just the value of scale and bringing everybody together for this is huge.
Yeah, you said 1.2?
Yeah, 1.2.
Yeah, 1.2. We're going to go buy a $7 million deal.
Yeah.
Right? So you need the team. You need to be around the right people. I know that we got more questions. We still got 50 people in here, and we've only had 6 questions. I remember the chat and what it said. I remember the chat said that at the beginning of this, y'all ran through that investor assessment, and it was 17, 30, 35, meaning that you don't have all the knowledge and understanding that you need yet. So I want to bring you guys up if you have questions. We got Garrett. Go ahead and bring Garrett Todd up. GT.
Hey guys, how you doing?
My man, how are you?
Okay, fantastic. Just a quick question: do you guys actually invest globally?
And where?
Globally, around the globe, outside of the United States. Let's suppose I did
Globally. Globally. No, not yet. I don't own anything outside the United States yet, but I'd love to. I'd love to own some stuff in freaking Saudi Arabia, Germany, some parts of Europe. I'd like to own real estate all over the world. Dubai, yeah, there you go. That's what I'm saying. I mentioned this earlier that I feel like we haven't accomplished anything yet, and it's because we haven't. I mean, where we want to go and what we are looking to accomplish, we're all on the same boat here together right now. Like I'm like one billionth away from accomplishing, what we really, really want to. So unfortunately not yet, but soon.
Okay.
You?
Thank you.
You own stuff all over US? I mean all over the world?
No. No, I don't. That is like one of my desires once I put plan here in the US first and then once to go outside the country. But you guys invest outside the United States.
Love it. Cool. Well, thank you for joining today. All right. Kat, can you grab her, please? I can't see your name. Martha. Go ahead and there you go. Hi, Martha.
Okay. Hi, how are you, Alex?
I'm great.
I have a couple of questions because I've done a lot, decades of nonprofit work and, don't really have any money to get started in this. How much money do you initially have to start out with your first investment? Just generally, I know it can vary, but I'm saying if you go real low ball because you have to crawl before you walk, how much money do you really have to put down usually, either on a property and also to do maybe an investment deal with your group?
Yeah. So the answer is with the right team and with the right, network and the right group of people, you don't have to spend any money on a deal, right? Like for example, you could.
How's that possible?
I'm about to tell you. So what you could do is, I mean, like say you brought a deal to us and you said, hey, I found this deal. I want to be a part of this deal. I don't have any capital. I don't have it under contract yet, but I want to be a part of it in a small way uh, with you guys and let y'all handle it all and learn along the way. Like somebody just did that with us recently, and they're getting free. It's not a ton. We negotiated the whole thing. We put up all the money for the whole thing. We structured the whole thing. We raised the capital for the whole thing. We are going to manage the whole thing. But the person who brought the deal for us is going to get free equity in the deal for just bringing it and learning along the way and watching us take care of the entire process. So like that's one way. But if you build the right network, it's really, really important. I know we've mentioned this 100 times, but having the right network and the right group of people is going to be imperative to your success because you need this team, especially if you don't have all the resources. But you find somebody who's willing to do these deals with you, who does have the capital and the resources to take down the deals, and you bring the deals with them and you partner with them. Doing it with us is a way. Doing it with anybody else is a way. But it's more than possible. You just need to be with the right group of people and have the right network.
Okay, so if you bring a deal that's got a good cap rate, yeah, you just present it to you and then go from there and let them make the decision. Yeah.
Yeah, I mean, there's a lot that goes into it, right? Like I know that, again, like I said, that we weren't able to cover all of it today at the few hours that we're spending together. But that's why, the courses and stuff are available for you to dive in deeper. And then from there, we can also start working these deals and you can work deals with my team all day long. Same with me and my partner, Matt. But yeah, it's more than just the cap rate, right? Like it's the location, it's the ability to add value, it's the cash flow, the good debt terms, the way we structure the whole thing, and how much money it's going to make all of us together. But absolutely, bring a good deal to us and let's partner. And like I said, some people want to just get a fee for bringing a deal, and that's fine. We're happy to pay fees. Some people want to represent us and get paid a commission. That's fine. We're happy to have you represent us. Some people want to bring a deal that they have under contract and they just need us to do one thing. And us, split it up proportionately to what each person's bringing to the table. We're happy to do that. Some people want to just bring the opportunity and get a small amount of equity for bringing the deal to us and us handle the entire process. Put up the money, put our money at risk, negotiate and structure the deal, raise the capital, get the loan, sign on the debt, all the things that are involved. And we're happy to do that too. Like I said, we just did that with somebody else. And so it can look a lot of different ways. It just kind of depends on what's important to you, where you're at, what you'd like to happen, what each party's bringing to the table. But before even getting to that point, you need to fully understand what a deal is, where to find the deals, how to do the deals, how to negotiate the deals, and how to identify the right opportunities to bring to us or anybody else to partner. And like I said, that's the whole purpose of putting together this Get Started Fast offer for you guys today.
Oh, wow. Okay, that's great. Yeah. Thank you for that info. Yeah.
What's been your biggest
Motivates me.
takeaway today,
I'm sorry.
Martha? Your biggest takeaway today?
I mean, the whole information of, how it, how the structure is to get going and the steps that need to be taken, to get started.
Yeah.
Because commercial is totally new to me.
Yeah.
So, yeah.
Am I muted?
The information.
Right now? Yeah. Well, good. It's a ton of info, Martha. And, the good thing is that you don't need to know everything to be dangerous. You don't need to know.
Are you still Yeah, are you still interested in the Austin market and surrounding areas, Marble Falls and, yeah,
Very much so.
Pflugerville had,
Love it. Love Austin
okay,
and surrounding areas.
good deal. All right, yeah, because I live in Georgetown.
That's beautiful. I'm a Round Rock boy through and through. Been here for 29 years.
Oh, good. Right down the road.
Yes, ma'am. All right. Thank you for joining today, Martha.
Thank you.
All right. Rachel asked, what's classified as good debt? Good debt. Can we bring Rachel up so I can have her expand a little bit further? Rachel, are you willing to come up and talk through this with me?
Hey, how are you?
I'm good. How are you? Am I muted?
Good, excellent. Thanks.
Okay.
I can hear you.
Okay, good. Sorry. When they control all the stuff over there, I don't know where I'm at, or I can't unmute myself. All right.
You're fine.
Talk to me. So you said what's classified as good debt? What are you thinking, or like in general, or like with real estate deals, or what?
Real estate deals, because and I worked with her for quite some time, since 2014, but I was doing it part-time. Doing part-time in order to, wasn't as profitable for me, but I did want to further my education, so I could get some more by becoming a broker, but I haven't had any commercial deals. In fact, right now, I do have a listing for 950,000 in Tamarack, Borderline Forest District, Florida. It's a little overpriced, and I did tell him that, so I didn't do an exclusive brokerage agreement. I really trusted a wrong person, and with the judge won't listen to my email, my comments, and my advice. He's not motivated. But I also have another potential multifamily in Fort Lauderdale, but they have a lot of debt. But I could give you that information at a later time.
Yeah.
But as far as the debt, I never really understood that part of it. And I do want to learn more about the commercial side of it because there's more money even for to be used there. And I do have a list of the few past buyers that I'm doing, and I was a casing for technician for that, so I'm kind of still doing it part-time. But I'd love to, I don't really have a lot of money saved up, but I would love to figure out how, I could, find opportunities for you guys and, learn the process as you go, how you do it, and,
Yeah.
with Carolyn, one of them. But, learning on your own in the field is a little hard, but I'm starting to build something. So.
Well, check this out. So it was kind of hard to hear you for a second, but I think I caught most of that. But let me, can we put on mute just for a sec so no feedback, Kat? Let me tell you and try and answer a lot of that. And I think I heard most of it. So we'll answer the good debt question in a second. I heard that you're in Florida. You have a listing. I think you said you're at Keller Williams. You're in Florida. You have a listing. It might be a little bit overpriced. You have another deal coming up. You want to do stuff with us. You want to partner with us. And we want to do that with you too. So I would first encourage you to take advantage of the Get Started Fast offer today. Like I said, what we're really trying to do, and you guys have to understand this, is that we have thousands of people who reach out to us constantly and want to send deals. And it's just not possible for us to have, a personal relationship with, 100,000 people who want to send a random deal. We want to make sure that you're trained. We want to make sure that you have the right information. We want to make sure that you know exactly what you're looking for. And we ultimately want to pour more into people who are willing to pour into themselves and pour into us as well. And so I would recommend you take advantage of this because it's going to give you everything that you need. And, by the way, like if y'all get this and you're not satisfied with the value that you get from it, just call us within 30 days and we'll send you your money back. We're not trying to make $247 here, and we're not concerned about that. What we're really looking for here is partners that we're going to be partnered up with for the rest of our lives. People who want to go make $100 million with us buying good commercial real estate deals all over the United States and then all over the world globally. So we're really looking for partners and seeing this is a test for us. It's like this person said that they wanted to take it to the next level. This person said they wanted to really do things with us. This person said that they wanted to get the right education and get the right tools to be able to go out and do a lot. But did they even take advantage of the free offer that we gave them, basically? Are they willing to invest in themselves? Are they willing to invest in us? And if the answer is yes, it's like, great. We want to pour our time and energy in with those people and start cultivating them and working closely together with them. And so I would encourage you to take advantage of this if you haven't already, because it's going to give you everything that you need, number one. Number two, we're going to spend 3 full days together at the end of April and the start of May, and I'm going to personally help you send an offer on a deal that will make you $1 million. And between now and then and for forever, we're going to be working these deals, and you have access to us and our team, and we're going to be able to go out and accomplish a lot together if you're willing to meet us halfway, right? Because we can't force somebody to take the action, and we can't do anything for you, but we just need you to meet us halfway. We'll meet you halfway, and then we're going to go make a lot of ground together. So that's that. We're really looking forward to partnering with everybody who took advantage of this today and is ready to take things to the next level with us. But the good debt question, so for real estate specifically, what I'm considering bad debt is very short-term debt, adjustable rate debt, any type of debt that is going to potentially put me in hot water, right? Like good debt is something that is lower interest rate. It might be interest only, for example, so you have a lower payment. It's fixed for hopefully at least 5 years or so. The longer, the better. This RV resort that we have is a 5-year loan, and it's 0% interest. That's insane. Like it's not good debt. It's not great debt. It's like unicorn debt. It's debt that we're probably never going to see ever again. And so we're looking to get debt like that. I don't want to go put a 50-unit apartment complex under contract today that I have to go get a hard money loan on just to close on it. And over the next 12 months, I'm scrambling to figure out how I'm going to get another loan and pay off this hard money loan or this bridge debt, right? So Fannie Mae, Freddie Mac. We also cover a lot of different debt options available for you inside the courses and where to find it, what they need, what their terms are, what they're going to be looking at. But Fannie Mae, Freddie Mac, good seller finance loans, good credit union or local bank loans, private money loans, anything that's fixed, low interest rate, low payment for as long as possible is going to be better than, short-term variable any debt that might put you in hot water. That's how a lot of people mess up in real estate is they get the wrong debt. And the debt is what gets those people in trouble. And that's what we were talking about today with the opportunity is everybody who's being forced to sell right now, they're selling because of one reason. What's the reason? Put it in the chat. Put it in the chat. Bad debt. That's right, Brandon. They're selling because of bad debt. Their debt's coming due. And so you don't want to be that seller. You don't want to be that person. The only reason they're selling is debt. Their debt's maturing. They can no longer afford the debt. Their interest rate is now triple what it was when they bought the property. Their payments, all these things. That's the only reason these people are selling. And so that is bad debt that you want to avoid. They got the wrong loans. They made the wrong bet. They analyzed the deal wrong. They didn't follow what we're teaching here and we're teaching you guys. So that's what I would consider bad debt, and that's what you want to avoid because that's what's going to put you in hot water and cause you to get in a lot of trouble. Agreed, Rob?
100%.
What else we got? Any other questions? I'll stay with you guys here as long as you want for any questions you have. Joel says, I feel very privileged with how much value you have all given me, for I am excited to get to continue to work with you all. Thanks, Joel. We are too, man. We appreciate you. We're blessed to be partners with you, sir. Go ahead and bring Mike up. Go ahead, Mike.
So, again, with commercial real estate having shorter to mitigate that, being exposed to the fluctuation in interest rates on these commercial properties. So you're not ending up like those other guys who are now bought the bad debt and they're in a bad spot that you can take advantage of basically.
For sure. So, number one is buying below value, right? So today, the real estate is cheap. Those guys bought this stuff at the height of the market. We're obviously not at the height of the market. They overpaid for deals because debt was so cheap. Maybe it made sense with like a 2.5% interest rate or 3.5 or 3.75. But now the interest rates are 7-8%. They're in hot water. And so the way that you make sure that it works is that you, number one, buy in a good location. We already covered that. That will, even with a bad loan and even with, a bad property, if you're buying in a good location, there will always be demand for somebody else to come buy that from you, right? So you need a good location. Good location, ensuring that it cash flows today with your interest rate today. The ability to add value. So you don't want to buy something that's maxed out. If it's maxed out, that means you can't raise the rents. When you raise the rents, you're increasing the income. You're also increasing the value. Location, buying below market value, the ability to raise the rent and add value to the property, and then also being able to get debt with today's terms. If it underwrites today and you still get a good return with today's interest rates, you're going to be just fine. And when interest rates start to lower, you're going to be doing 10 times better. And so if you just follow all of those things and make sure that it checks all those boxes, you're going to do great. Now, you want to execute your business plan of raising the rents, adding the value, and you're going to be able to sell it or refinance later the next opportunity that you get. Make sense? Cool. Thanks, Mike.
Thank you.
Yeah, thank you. All right, let's bring Garrett back up.
One question, after the 247 debt, any other investment out that one person?
Garrett, I can barely I can barely hear you. Did you hear him, Kat? Garrett, talk to me, man. You there?
No, I was asking, once someone makes their 247 investment, is there any additional out-of-pocket expenses that's necessary for the program?
No, not at all. Only out-of-pocket expense that is not included in this is your effort, your commitment, and your time, because you're going to have to put those things in there. You're going to have to put some effort in. You're going to have to get committed. You're going to have to put some time into it. But no other costs at all associated.
All right, thanks.
You're welcome. All right. You guys have anything else? We had where is the best places to look for multifamily properties that are a good deal? Courthouse records, good place to look for tax default, etc. properties. Martha, what I would recommend Y'all can hear me? Am I talking? My team left me. My opinion is the best place to do this, Martha, would be to go speak to some brokers. Mr. Henson, we have other brokers in here. You need to go out and meet some players. You need to get around people who are doing deals and have the deals. You can absolutely go to the courthouse steps. You can look on different places like that. But you want people to send you deals. That's the beautiful thing about what we have set up is that we have a ton of people who send us deals all day long. Investors, brokers, wholesalers, lenders, managers, etc. The deals come to us. We get 50 deals a day that we're looking at and analyzing and working. And so that's when it really starts to add up, is when you have deal inflow coming to you versus you going out and cold calling and such. But you can do both, and just go to loopnet.com and see what deals are available and make contact to those brokers. Deanna said 247 plus $47. No, Deanna, that's if you want to upgrade to the VIP ticket for the boot camp, but you don't have to get the VIP ticket. You already have a general admission included. It's just $247. If you want to get the VIP ticket, you can by upgrading, but you don't have to. All right. Any other questions? I enjoyed this today. I had a lot of fun with you guys. How many days in the boot camp with VIP? So normal boot camp with general admission ticket is 3 days, and then you get an extra 4th day with the VIP ticket plus a few other things that we're going to throw in there and spend a whole bunch of time with just us and the other VIP members. We may even put a VIP deal together on that VIP day where all the VIP ticket holders come in on this deal together. What is the mortgage payment in the equation? Is that part of operating costs? Mortgage payment is your debt times your interest rate. You can go to Google and type in mortgage calculator if you want to get down to the specifics and plug all the numbers in there. But it depends on if it's principal and interest only, what the amortization is. It's a formula to come. What'd you say? All right. So the mortgage payment calculation, it depends on if it's interest only, if it is principal and interest, what the amortization is. But you would go to Google and type in mortgage calculator and plug in the numbers to calculate a payment based on your principal balance of the loan. What do you think of the Freddie Mac 5% down deal on fourplex? I think it's a good opportunity for people. I think that, like I said, Martha, I would encourage you to what, Robert? What would I encourage her to do?
What was her question? Sorry.
I would encourage her to think bigger. You got to think bigger, Martha. Go put 0% down by partnering with us on, a 100-unit apartment complex. But the 5% down deal on Freddie Mac, I think it's good. We talked about this 2 weeks ago when I was about to get on a plane. It's going to be very hard for you to find a deal that makes sense in Georgetown, Round Rock, Austin, Leander, Cedar Park, anywhere around here that's a fourplex. It's going to be very hard for you to find one that makes sense. I'm only telling you because I own them, and I own a lot of them. Matter of fact, I'll sell you mine if you want. You just contact me, and I'll sell you my fourplex in Georgetown. You can have it, and you can use the Freddie Mac loan. 30 years. All right. My hand's been raised. All right. That is below. All right. Thank you, everybody. We've had a ton. All right. We got one more. We've had a ton of fun today. I really enjoyed hanging out with you guys. I hope that y'all gained a lot of information from this. To wrap up the call today, I want you to do this. I know we did that investor assessment at the beginning of this, and you said you rated your knowledge. What would you say your knowledge is now? Put it in the chat. Put in the chat what your knowledge currently is based on these things here. Some of y'all were 17s, 30s, 100%. All right, my man. I hope that we've been able to increase your knowledge here today. Apologize again for my throat and being sick. We got an 80. Come on. Went from a 36 to a 60. Lori says way better. Signed up to get it to 100. Let's go, Mike. Signed up to get it to 100. Keep on going. Love the wisdom. What's your score now that you participated in this workshop that we did today? 22 to a 33. All right, at least it's an increase. Hayden, we're going to get you up to an 80 here soon. But I had a lot of fun with you guys today. Thank you so much for attending. I really appreciate you guys. For everybody who took advantage of the Get Started Fast offer, I guarantee you're not going to regret it. We will go 1,000% with y'all. Y'all invest in us, invest in yourself. We will invest back with you. Hope to spend another day with you. For those who got started on this and the Get Started Fast workshop offer, we're about to start working a lot of deals together. We're also going to be at the boot camp together. But reach out if you have any questions. We're always here for you guys, and we will see you at the next one.